真的很厉害。
你的意思又不是说要他给你，意思是说，既然你要开这个会，你的公司是卖饼干的，你就应该有。
哈，他
他
他当然也是半开玩笑啦，对对对，但是他这还蛮好笑的。好，我这差不多可以回家了吧？嗯，No，OK，唉。他放什么影片的话就不翻，就管他了。一直还没，对不起，还在传。
为什么你那么慢？我好快就拼。
对你为什么这么快呢？
对啊，我很快就拼过去了。
我觉得我东西这是东西太多了，我是放太多那个
你这是什么电脑？是 MacBook。
MacBook Pro，对对对。
奇怪，那你应该比我更快。
我这是里面我觉得太多了。
像我那个电脑上面写的 Battery Service Recommended。
哦呀，
可是我觉得有必要吗？
这个拿去修。我觉得
买一个新的电脑。
你是你是什么时候买的？
3、4年前吧4年前。
要看呐、那个
他们说换个battery 大概
对
要200、300。
这么贵啊？
对对对对。
它不是个 promise 吗？说什么只是修一次会100块？那可能要考虑一下在美国修。
我没有来。
哦，没有，就是 care 不 care 就不 care 啦啊，就是好像是他有一个 promise，就是说一个承诺嘛，说你不管是什么时候买的，你好像就是不管修什么都是，还这个之前的事情我不晓得是90块，
OK。
我大概吧，又不是说具体是多少我不晓得。
第二台
哎，
二手的才500块。
哦，好吧，好吧，那比较难讲啊。
可是我那个二手是 practically new。
OK，是 refurbish 那种吗？呀、
没有啊，就是可能 slightly used。
哦，
一样。
好吧。
因为远程一个电脑不够嘛，你需要。
对对对，一两个，对。
所以我后来其余买一个 screen，我想forget了，
就买个电脑好了。
我先买了 iPad，花我1000块，就我觉得 iPad 不行，我还是要电脑。iPad is nice to watch movies，
就是 not yeah for work，yeah。有一些同事好像会用它，就是在部子里头也会用它，什么就是找词汇啊什么有的没的，我比较不会啦，对 iPad。
我的 iPad 是用来玩 game 跟看电影，因为它的那个。
data center construction, energy resources. So many questions left. We can rise above and overcome challenges. WDMS 2022 will answer you in Miami, the crypto capital of America. BITMAIN invites you to take part in revitalizing the future, focusing on the mining industry. Optimizing data centers, understanding the plan of operations and energy issues, advancing to the future, calculating trends in the cryptocurrency industry. Join WDMS, technology driven, and connect to the future. Let BITMAIN take you on a journey to witness the future. Good morning, everyone.
大家早上好，希望大家昨天晚上过了一个很美好的晚上。那大家希望准备好了，可以参加今天的分会。首先，如果需要口译服的话呢，我们在各位的座位上放了翻译机，现在可以带上，可以转到A 号频道。那么这一个可以互用中文、英文都会在 A 号频道使用。女士们、先生们，矿工、区块链的爱好者，大家早上好！欢迎大家参加全球数字矿业分会。比特大陆是全球领先加密货币硬件的制造商，我们非常的骄傲。我们跟赞助商还有我们的合作伙伴一起主办了今天的分会，在 WDMS 全球矿业及发电公司集合在一起，我们全力以赴创造更好的未来，给全部的数字货币行业。WDMS 是一个新商机的平台，提供给行业专家以及新手。本年的分会是一天的活动，包含高档专家还有行业领袖的演讲。今天主要谈论到的主题包含挖矿、新电源，还有基础设施托管、矿池等等。我今天仅代表我们的大老板张总 Merkle， 我们想非常感谢各位的来到迈阿密，跟我们一起参加今天的活动。我也想感谢我们所有的赞助商，还有我们的合作伙伴，跟我们一起主办今天的活动。那么在网络上加入我们的大家，也非常的感谢你们在不同的时区也参加我们的大会。那么我们一起聆听我们精彩却备有挑战的行业有什么样的未来。首先，再提醒大家要遵守活动的规则，还有我们的员工的指南，这样子可以确保每一位的安全。那么一开始我们有请迈阿密的市长，他非常的遗憾今天没有办法到现场，但是他有一个小影片，一个小短片提供给大家看。各位来宾，欢迎来到迈阿密，欢迎参加全球数字矿业分会。非常的遗憾，今天无法亲自到现场。我非常的荣幸，大家来到迈阿密，提升迈阿密作为一个全球加密技术中心的声誉。众所周知，比特大陆是全球领先的数字货币挖矿服务器的制造商。比特大陆团队全力以赴，提供一个增强的平台来讨论矿业的现状、矿业的新投资方案、数据中心的 水能的技术，以及涵盖 Web 3.0生态系统带来的机会。那么，数字货币为我们的子孙后代带来创造繁荣的潜力机会。其他的城市和国家选择攻击加密货币、矿业挖矿，还有新网络，迈阿密却选择了欢迎这项技术。其工程师还有企业家作为所有并且为所有的寻求自由、公平和繁荣未来的人倡导数字革命。我们一起参加今天活动，我们一起帮 Suarez 市长鼓掌。那么他深信比特币说有他们支持我们是非常好的。那么我们今天第一个讲者，大家可能知道，这位女士是我们全球销售主管 Irene 女士。
I'm hearing it from the ambient. 大家早上好，大家好。首先，我要欢迎大家，来自全球各地的女士们、先生们，以及业者呢，各位行业里的专家参加我们今天的大会，欢迎你们。首先，我要借这个机会向我们的顾客表达谢意，也感谢我们的赞助商。谢谢你们在百忙之中拨冗参加我们的峰会。我们很高兴能够和大家共享呢这段美好的时光。WDMS 提供一个良好的平台，让我们能够提供区域以及全球的行动者、各位行业的专家，能够有机会共聚一堂，来针对呢数字挖矿的未来进行讨论。首先，我们回顾我们峰会的历史。我们从2018年开始举行会议，那么去年我们在迪拜举行会议，那么现在我们在迈阿密举行我们的区域峰会。我们很高兴有这个机会能够为我们的行业做出贡献。在峰会中，我们成功地宣布了我们推出一系列新的最佳技术的产品。在峰会中，我们推出了水力冷却矿机、水冷矿机。那么这也很成功地向中东、东南亚以及美国交货。之后，我们也安排了大家去参观，在4月份的时候呢，参观我们的水冷的矿场。我们也希望能够欢迎大家和我们一同欣赏这个新的技术。另外，我们还推出了新的风冷的矿机，包括 S19XP， 还有8和9。昨天晚上大家在欢迎晚宴上可能也看到了我们新的产品。我们也希望未来呢，会有更多的人来更进一步了解我们新的 S19XP 产品。我们也很乐意的与大家分享呢最新一代的产品。另外，我们在我们的官网上呢，也会为大家介绍呢 Antminer L7 以及 Antminer E9 的产品。从去年开始，我们也和许多的合作伙伴密切的合作，来共资扩展 挖矿的基础设施。我们要更进一步的来推广我们的挖矿的能力。与此同时，我们也和我们的合作伙伴密切的合作，包括 Merkle Standard。我们向美国华盛顿州的当地的第2消防队呢捐赠了74000美元。另外，我们和 Applied Blockchain 也向北卡罗来纳州的一个户外的建筑物捐赠了5万美元。我们不断地发展我们当地的工作团队，在5个国家里，我们也不断地来和我们的顾客联系，拓展我们全球的业务。我们在和我们的顾客交流的过程中，我们也更进一步了解大家所面对的挑战以及问题，比如说缺少的资本、缺乏挖矿的能力以及挖矿作业的不稳定。我们也希望支持
industry by some of our resources that brings together with our partner and our affiliates. So first of all, I would like to share that. So we get the involvement of our strategic partner AntAlpha and a range of financial institutions in the industry, and bring more financial opportunities. And this, I think, such as the financing to the mining equipment, the crypto-backed loans, as well as loan to hosting fee, which is very welcome to our clients. And if you have interest, please talk to our sales managers, and AntAlpha also have a booth there. You can talk to the team. And we recently, I think by the middle of the month, we released and issued the first series of rewarded coupons to our clients who work with us since 2021 on the long-term agreement. I think at that moment, this is the first time that our clients would like to structure for the future together with us with stable supply of our mining equipment. And we would like to work with them for a long-term partnership, and this reward coupons issued and will be issued for the next batch very soon. You can expect in it. And we also would like to expand our support to the green mining and with reducing the carbon footprint by issuing coupons for our antique miners as miner S1 and S2. So if you have some of those antiques in your warehouse or in your racking space, I think that there's some of our clients have the idea to make a miner museum with those equipments. And I think now you have two options: either put in the museum or send it back to BITMAIN in exchange of $200 coupons for 1 unit. And the coupons for S3 and S4 will be available very soon. We would like to empowering the mining infrastructure by all means, but I think now we're focusing on creating a mining capacity sharing platform with our team, and you might meet the team who are led by Xander. And the idea is we will get the leading hosting service provider be connect with our available customer who focus on long-term run in this industry, and to ensure we can lower the risk and make the capital as friendly as they can to ensure clients get proper resources and get the miners installed as soon as possible instead of placing in their warehouse. And furthermore, we keep producing or we restart the production of N-space. It's not because we want to, make profit of this kind of product, but want to provide a one-stop solution to the industry to ensure we can firstly shorten the construction period, and secondly, we would like to maximize the capital efficiency by reducing the capex. And if you would like to build air cool mining infrastructure or hydro cooling mining infrastructure faster and with less cost, I think N-space would be a good option for you. And I think we are trying to make the operation of mining as stable as it can be, because during every circle of Bitcoin price down, if you can balance the profit properly, you can win in the future. So the hydro products and this solution is the latest way we think is the best option to explore. We develop the technology, ensure the miners can work no matter from spring to winter, from north to south, all locations. We won't be limited to the geography, and the hydro solutions is really fast deployment solution, which provide a very unique efficiency of the mining. And there's always opportunities ahead of us, but for now I would like to say everybody knows the best moment to enter in Bitcoin mining industry is now. And there might be some options for you to empower. And we also would like to bring you some opportunities for, from the POW mining new forces. So from the picture, I think it just shows some very clear and very simple data. Whenever you invest, put investment in the beginning of bull markets or during the down of the circle, there's more profits expected to come. And we have two kinds of miners optimize the POW mining, and which is treated as new force and the most, one of the most profitable miners in the world now. So we have AntMiner E9 was available on the website, and we'll release the next batch of it very soon. You can check our official website and or keep an eye on our social media. It will be announced promptly. And we also have an AntMiner L7 which is treated as the most efficient miners to mine Litecoin and Dogecoin. So I think with all those solutions and all the opportunities ahead of us, we could work together and bring the opportunities to the industry and endure the cycles properly. And I would like to highlight a little bit of this event because we really think this platform can bring more opportunities and nurturing corporations where the investment solutions and data center corporations, the proof of work ecosystem, and the data center manufacturing operations. So I would like to say thank you again to joining us today and support the event. I hope you enjoy the conference and find the cooperation opportunities and find ways to optimize your mining business with us. Hope you enjoy the time in Miami. Thank you.
Irene, thank you for the wonderful speech. That was a great job. I think we can see that one of the challenges with working with any company is finding information, learning about what programs and what opportunities are out there. Irene just introduced a lot of interesting programs. That was the first time I'd heard the idea of a miner museum. So if you have any questions or if there's anything you need from our company, Irene is a great contact to have. Feel free to reach out to her. She'll be here all throughout the event. And all of you as miners know that in the mining industry, getting miners is only part of the equation. You can't do it alone. So the next person is a really great guy to meet. He is the managing director of AntAlpha, Max Liao.
Can I get my notes? Ah, there we go. All right. Good morning, everybody. My name is Max Liao, and I'm the Managing Director of Business Development at AntAlpha. It's an honor and a pleasure to be here speaking at this session, and especially so by invite of BITMAIN. Now, I'm pretty sure that most of us in this room today didn't get here by always taking the easy road. There have always been challenges that underscored opportunity and risk behind the reward. And yes, times may be tough at the moment, but for those who take the right risks at the right time, especially in this industry, the rewards can be extremely lucrative. So, let's get down to business and talk about how AntAlpha can help everyone here, miners and lenders, attain success while also mitigating risk. Now, beyond taking the right risks at the right time, there are 3 key elements that every miner needs for success: mining rigs, megawatts, and money. And when it comes to mining rigs, well, that's why we're all here, because of BITMAIN. Megawatts, that is what the miners do best: operations and electricity. And as for money, well, that's what the lenders take care of, and that's what I'd like to talk about today as well. So for those of you who know AntAlpha, please indulge me for a moment as I make a quick introduction for those of you who may not yet know us. AntAlpha is the designated financial services partner for BITMAIN and a strategic partner of Antpool and BitFuFu, and we're proud of this distinctive relationship. We offer an international full-service integrated platform. Our core business is our asset management, prime brokerage, trading, and hedging services, and we've started foraying into miner financing because we see that the market is in need of resources and support. We boast a professional network that spans the ecosystem, from digital assets to traditional finance, manufacturers to miners, and lenders to investors. And finally, we manage risk effectively. Effective risk management is something that I am sure is of renewed importance to everyone in this room, especially given the events of the past few months. And for us, it has always been about risk-adjusted returns and proper risk management, executed with agility, flexibility, and most importantly, prudence and care. But the focus today is not on who we are. It's what we're here to do. Our purpose and goal, our primary purpose and goal at this moment, is to help miners navigate through the current bear market so that when the next bull run comes, we're all here to reap the rewards. For miners, the biggest need at this moment is how to increase liquidity and preserve the Bitcoin that they have on hand. And we're here to work together to solve these problems. Because as the industry advances, so too does the ecosystem, as it should. Years ago, financing was a dream at best to many of us, to all of us, when it came to Bitcoin mining. Yet now, the cryptocurrency mining market and the lending market combined is a multi-billion-dollar industry. And there are financing solutions available that are not only familiar, but continuously innovative, thanks to our lenders. And to our lenders, we know that the biggest challenges that you face are effective capital utilization, accurate risk modeling, and effective risk management. Bring your problems and your proposals to us, and together we'll make it work by collaborating to offer bespoke financing solutions for our miner clients. Because just like the finest timepieces are handcrafted, so too should our approach to financing for our miners be custom tailored. It's a big market out there, and as much as we want to support the miners, none of us can do it alone because each of us has limited resources, and that's why we have to collaborate. So what does collaboration mean exactly? Well, the sky's the limit. And there are countless ways that we can work together. But let me start by sharing an arrangement that we're currently finalizing with a partner lender. Now, when we first encountered this deal, both the lender and the miner were in discussions but stuck at an impasse. What was holding the lender back? Risk tolerance. What was holding the miner back? Their risk profile. And at this point, it wasn't working out. But thankfully, the lender reached out to us, and we had an open and honest discussion on how we could get it done, and we reached a solution. Firstly, in order to help mitigate the risk for the lender, we were able to provide proprietary data and expertise for the lender to enhance their risk model. Secondly, we took on a part of the loan, and our portion was subordinated debt, which means we take first loss. And so this is what the final arrangement looked like. Well, the numbers have been adjusted for ease of reference. But in this case, miner seeks to borrow $10 million with mining rigs as collateral. AntAlpha took on 20% of the loan, $2 million, and our partner lender took on $8 million, 80%. And again, the reason why this deal became acceptable to them is because we're able to provide that subordinated debt, a cushion, and in addition, the proprietary data and expertise, which they can incorporate into their own risk models and use in the future, with or without us. And the reason why we did that is because we all need to work together. Miners, lenders, and AntAlpha. Because when we do, not only am I certain that we can come up with a solution that's mutually beneficial, but frankly, it's something we need to do. Because in this industry, we're all in the same boat. And sink or swim, probably going to happen together. Now, next, I'd like to move on to some solutions that AntAlpha can offer to miners. But if you're a lender who would like to work with us or learn more about what we're doing, please don't be shy, speak with us. So, what I'm going to talk about next is something that we're quite excited about, using hash rate collateralization to pay for electricity. Now, electricity is one of the major cash flow headaches that all miners have to deal with, and we'd like to help resolve that situation. So, hash rate collateralization means that our miner would pledge their future Bitcoin production to us in return for loan facilities. That means that instead of having to pay electricity fees out of pocket, that electricity cost, the entire amount on a rolling basis, can be financed. So this bears repeating. For our miners, instead of paying the full cost of electricity every single month out of pocket in cash, now can finance that cost and pay only the interest associated with the cost of that electricity every month. So why would anybody want to do this? On a most simple basis, let's say we're a miner, and we forecast that for the next 4 years, our cost of electricity is going to be $10 million. We got to pay that. But we collateralize our hash rate, and we finance the cost of electricity. At an interest rate of 6.6%, instead of spending $10 million over the next 4 years, our cash outlay becomes $1.35 million. Not too bad. Of course, you do have to pay the loan back afterwards, but still, it is an extremely powerful financing solution that will enhance the operations and enhance the returns of our miner clients. Now, I do apologize. I'm going to hit you all with a lot of numbers right now, but it's important that we talk about this and actually have some more detail to it. So please, bear with me. Let's say that we're a miner. We've got a budget of $10 million, cost of electricity, 8 cents per kilowatt hour. We're modeling this out for 4 years, at the end of which we assume the price of Bitcoin is $50,000. I think that's conservative, but for the sake of argument, $50,000. We're using the Antminer S19 Pro that we've picked up at $42.50 per terahash. Now, we spent $3.4 million on mining rigs. Why? Well, because we're very prudent, very careful, maybe too much so, and we anticipate that the next 4 years' electricity cost is going to be $6.6 million. So we retain the $6.6 million as cash on hand, and we take the remainder, $3.4 million, to buy mining rigs. Assuming stable output, at the end of the 4 years, we end up with 384 Bitcoin that we sell off, and at $50,000, we'll get a gross return of about 92%. If we were then to apply electricity financing to this example, we'll hold some of the factors constant. $10 million budget, same electricity, same time frame, same Bitcoin price, same rigs. But in this case, instead of retaining $6.6 million, we retain 2, because that is the cost of the interest for the electricity that we financed. And now that we only need to retain $2 million, we could spend much more on the rigs, near $8 million. And same thing, at the end of the 4 years, we decide to sell our Bitcoin, but of course this time we have to pay back the electricity loan first. But that's okay, because now we have 896 Bitcoin, which results in 193% gross return. So when we apply this financing, it makes it applies an element of leverage to it, and it also makes the cash flow situation much easier to handle. For the sake of argument, we have our $10 million, and maybe we just don't do this whole mining thing. Right? We just go ahead and buy Bitcoin, buy and hold, assuming $20,000 today, 4 years later at $50,000. Great, we make a tidy sum, but still, electricity financing wins out. Now, for this model, there are a lot of assumptions made. Probably doesn't apply to everyone here. So if you're a miner and you want to find out and you want to figure out how this can benefit you, please come talk to us. We'd be more than happy to work it out with you. Quick overview of the terms in case I notice people have been taking pictures, so please feel free to take a picture of this. The most important thing here is that the hash rate must be collateralized with ANT pool. Good. Next up, we have purchase order collateralization for interim payments. Now, generally speaking, a purchase agreement for mining rigs has 3 elements. It's the advance payment, the interim payment, and the final payment. Now, the advance and interim payments are both set on the date when the purchase agreement is signed, and the final payment is determined later by market price. So, some of our miners are facing a bit of a conundrum. Let's say we have a miner who has placed an order of 10 million US dollars with advance and interim payments equal to 35%, 3.5 million. So advance payment 3.5 million, interim payment 3.5 million. And let's say our miner put in this order a few months ago. At the time, let's say it was $80 per terahash. But now it's time to pay the interim payment. And market price is $60 per terahash. And so that is a 25% difference, and our miner wishes to pay the interim payment according to current market price. Now, while we cannot change the terms of the contract, what we can do is provide what's essentially a cash advance. So the difference on the contractually obligated interim payment and the market price is $875,000 in this case, and that $875,000 is what we will loan. And because this is a new initiative, we're willing to offer preferential terms on the loans. And by preferential terms, I mean a reduction or a waiver of all interest for the duration of the loan. It's almost free money because we want to provide as much flexibility as possible for our miners. Now, the terms of this arrangement, most important thing here to note again is that the interest rate will be based on the specifications of the mining rigs and, more importantly, can be reduced or waived, contingent on the fact that the purchase order isn't canceled. If you cancel the purchase order, unfortunately, the deposit amount associated with it will then become our collateral because we have to make it fair. All right. Next, let's talk about another financing method that should be familiar to everybody, token collateralization. So miners generally face the issue of having to cash out on their token holdings in order to pay for operational or capital expenditures. And by collateralizing the Bitcoin on hand instead of selling it outright, this helps to preserve the asset so it can be sold later at a better price. Quick view of the terms, industry stock standard, nothing really special here. 70% LTV, 6.5 to 8% loan interest. There are margin call, liquidation triggers, open-ended or fixed-term loans. Now, what I really wanted to share about the token collateralization, again, I got to talking about customization, custom tailoring. Well, in this next case study, we had a miner client come to us and again wants to borrow $10 million. That's cool, we can do that. Bitcoin is collateral. And we grant them 65% LTV, monthly interest rate, annual interest rate 5% paid monthly, and a loan term of 1 year. But what made this interesting was because our miner had a special request. He asked, can we do it with no margin call, no liquidation? And the answer is yes, because we can use an underlying caller option strategy to execute it. And again, everybody please bear with me, because we're using options, it gets a bit complex, but I do want to walk through it. So in this structure, when the loan expires, we have to do a calculation. So what we mean by calculation is this. On the expiration date of the loan, let's say a year from now, if the price of Bitcoin on the expiration date of the loan is less than 65% of the Bitcoin price when the loan is initiated, principal doesn't need to be repaid, collateral is forfeited. Secondly, if the price of Bitcoin on the expiration date of the loan is between 65% and 150% of the Bitcoin price when the loan is initiated, principal must be repaid, and the miner will obtain the collateral in return. Thirdly, if the price of Bitcoin on the expiration date of the loan is greater than 150% of the Bitcoin price when the loan is initiated, principal must be repaid, and the miner's collateral will be returned at 150% of the initial Bitcoin price. Did everybody get all of that? All right. So now the reason that we tolerate this complexity is that, again, no margin call, no liquidation. Particularly with this case, and with all other cases as well, actually. Kindly be reminded all the terms are indicative and subject to final agreement, because again, we're using options, so the final terms of whatever we may actually work out may be somewhat different. Finally, I'd like to share on one last customized deal that we worked on, which was combining hash rate and token collateralization. So in this case, again, our miner friend seeks to borrow $10 million US and is willing to collateralize both Bitcoin and his future hash rate production. And by combining the two, we're able to offer 90% LTV on the Bitcoin collateral and hash rate collateral instead of the usual 60, 70%. And at an interest rate of 6.6%, an open-ended loan, I think this is something that was quite attractive to our miner client and may interest you as well. Finally, again, the terms. Now, really, it looks pretty similar to what the token collateralization is, except in this case, higher LTV, a hash rate is also included, and also the margin call trigger is slightly different. All right. Now, before we wrap up, just a quick note on the process and timeline, because we always get asked about this. Overall, from NDA and onboarding to final collateral and loan transfer, the timeline should take around 4 to 6 weeks, assuming, of course, that everything runs smoothly for both parties. And that brings us to the end. To conclude, I would like to share why other institutions have chosen to work with AntAlpha and why they continue to do so. The main reason we've been able to gain the trust, confidence, and cooperation of our partners is because the core value and the most significant proposition of our company is risk management first. And that is why we've been able to successfully weather the events of the last few months. And that is why we have the resources, and we will continue to have the resources to help our partners. And we're done. So I know we covered a lot today. There are a lot of numbers, a lot of facts. I'm sure there will be questions as well. So please reach out to myself or my colleague Ning via Telegram. I wanted to get him to stand up, but he said he didn't want that attention. So please come find us at our booth. I know there are no pictures on here. You know what I look like, but our booth is just outside to the left. And to the miners, please come talk to us. We're happy to discuss any financing needs that you may have. And to the lenders, we're excited to talk to you about how we can support you in your endeavors. Look forward to speaking with each and every one of you. Let's get through this bear market together and come out strong. Ladies and gents, thank you very much for your consideration, your patience, and especially your time and attention. Have a great week ahead in Miami. Thank you.
Wow, that was a great speech. For myself, it was the first time hearing about so many options available in miner financing. But I think what's interesting about it is that Max touched on a really important theme for all of us in this room, which is working together. So not just miners, but also lenders working together is a way that we can come together and make it through this bear market. Our next speaker is a man who needs no introduction, but I'm going to introduce him anyways. One of the largest miners in the US, Mike Levitt, the CEO of Core Scientific. Everyone, give a big welcome for Mike.
I've been asked to speak about capital markets and capital availability. Can you all hear me, by the way? Can everybody hear me? Raise your hand in the back. Can you hear me, yes or no? Because I have a lot of ADD and just standing still is tough. But it's interesting to follow what seems to be the most available capital resource in AntAlpha. So I don't know about you all, but I intend to have a meeting with them sometime in the next 2 days. First, I want to thank the folks from BITMAIN. I want to thank them. Oh, there you go. I think they can hear me, though. Anyway, I want to thank the folks from BITMAIN, especially my friend, Mr. Du. Thank you for the partnership that you all have worked with us on. CEO, Mr. Joe, pleasure to have met you over the last month and have gotten together with you. Certainly, SQ. Love having you in the U.S. and Irene for all you've done for us for all these years. BITMAIN is an extremely important relationship of ours. As of midnight last night, we were operating 191,998 BITMAIN A6 machines in our facilities. If I win the lottery, we'll be up to 191,999. So I'm hoping. We've been given a limited period of time here to talk quickly about capital markets. And I always like to theme a talk. And so this talk I'm giving the name Silver Lining. My father was actually a charter boat captain here in Miami for a few decades, and the name of his boat was Silver Lining. And he used to say that's because no matter what, in every cloud, there is a silver lining. There is opportunity. And that's really how I feel about the capital markets as they exist today in our industry. You know, if we're going to set the stage, yes, it is true that a year ago, our industry, the Bitcoin mining industry, the public companies in the United States, of which there are about 25, was trading about 7.2 times revenue. Today, we're trading about 1.7 times revenue. Our aggregate market cap was about 25 billion. Today, that's about 5 billion. And so, on the one hand, we can be bummed about that. We can think about the fact that last year, the public companies raised about $3 billion in capital. And year to date this year, it's been about 300 million. But that's not the whole story. That's simply the state of the markets as they exist today. And markets ebb and flow over the course of time. I have, on occasion, been referred to as the oldest guy in crypto, and I don't think I am. I may be the oldest executive in Bitcoin mining, but not the oldest guy in crypto. But as a result, I've been involved in markets for 39 years now. And I've lived through Black Monday. I've lived through the flash crash. I've lived and invested through the internet bubble. I've lived through the global financial crisis. And the fact of the matter is that working through every one of those distressed, tumultuous periods, opportunities presented themselves. And if you position yourself to take advantage of those opportunities, there are tremendous profits to be made when we come out of this period of time. And make no mistake, every one of those events, every one of those periods, prior recessions, we've come out of those. And those companies that position themselves to come out stronger do really, really well. There's a little bit of an expression on Wall Street, and it kind of relates to, I've also got a 9-year-old daughter, and she likes to go to Build-A-Bear. And I think about this when I think about our markets. It is axiomatic in this industry that, in fact, in bear markets, that is when you should be building your business. That is when you should, in fact, be looking at opportunities, when you should be trying to strengthen and grow your business. In the bull markets, you want to solidify your business. You want to make sure you're well positioned. But in bear markets like this, we should be doing everything we can as Bitcoin miners to build our business, which kind of gets to what's going on in the industry. And there are plenty of opportunities for us to build our business, but the fact is we need to be cooperative. We need to be partnering. Events like this are important because it creates engagement around our industry. And having success in the capital markets, especially when we're dealing with what is really an industry in its early days. I mean, let's face it, we're a pretty young industry. And having watched various industries grow over the course of time, one bit of advice I would give to everybody is that we're partners in this room. And our future success is really dependent upon one another. Because if we all work together, we'll be able to deal with tumultuous capital markets. We'll be able to deal with distressed times. We'll be able to deal with a little bit less availability of capital if we're all working together. And so we are certainly in a market where there's going to be merger and acquisition activity, without a doubt. There are plenty of folks in Bitcoin mining specifically that had been looking to go public. Just need a sip of water here. But of those 20 or so companies that were looking to go public, look, it's going to be very difficult to go public anytime in the near term when we look at markets and trading values. But we should be talking to one another about maybe combining forces. All right. In a market like this, you want to use your equity to build your business, even if you think your equity is cheap, right? Clearly. So I think we're going to see a lot of M&A in our business. I also think we're going to see other entrants in the business. I think we're going to find those that are what I would call peripherally around the business, looking to try to be more creative in and around the business, right? And that includes financing sources, it includes power companies, it includes those that may not have been directly as involved in Bitcoin mining, but are looking at it more and more now. Because the other thing about markets like this, and look, and we've seen it, and as difficult as it has been, markets like this really do strengthen industries. Because the fact is, the business models that probably shouldn't be around don't survive, right? And we've seen any number of business models in the last few months in our industry that just kind of aren't making it. But if you really, really take a look at those models, and if you're completely unbiased in looking at them, right, maybe they shouldn't have survived. Because at a point in dealing with capital markets, the truth is you can only create businesses that earn what the markets will allow. And when times get excessive, when returns are promised that are excessive, when risk outweighs really what the appropriate reward is in any given industry, you're going to have some failures. And that's what we've seen. So part of what's going on in our capital markets, yes, this is a risk-off period of time in general, not just in our industry, right? We've seen it across the board. It's a risk-off period of time. Our industry specifically, though, has also had to deal with what I would call a bit of a cleansing and the chaos that comes with cleansing. And what are probably temporary but very heavy pressures on the price of Bitcoin with some of the forced selling. And I'm not talking about some of the selling that Bitcoin miners have done, including ourselves. The selling we've done is, at the end of the day, we have to pay our expenses in dollars. So we're going to sell some Bitcoin, right? You're going to have to sell some Bitcoin. In a capital market environment where you cannot raise capital at reasonable rates, you sell some Bitcoin, you pay your bills. But the big pressure probably is starting to subside. And I think with that, and with the stability that we've seen of late, we're going to see more capital coming into our industry. Because the one thing about capital markets that I've found over the course of time is stability and predictability begets capital availability. So the longer that we see this stability, the less volatility we have. We think we're going to see more and more capital availability, but it's going to be rational capital availability, right? We had a period of time when, much like 1999, there was too much capital that was too indiscriminate that came into our business. And that creates an unstable environment. Same thing happened with the internet bubble. And the business models that should survive did, and the business models that shouldn't did not. But the key and the principal outcome, and what I always like to kind of remember in these kind of environments, is that it really is true that those business models, those businesses that survive this kind of period in time, we're the ones that thrive, right? We're the ones that, in fact, get to benefit from what has happened with our industry, from the fact that it is rationalizing, that it will come out of this period of time more stable. And so when you're thinking about your business models, or when we're thinking about our business model, we're working to build a business model that we believe will endure for the long term. Because let's face it, we all in this room think this is a very long-term business. It's just got some short-term volatility. And so my one takeaway, if I were to leave you with anything as it relates to capital formation, capital markets, the state of things, is everything you do in this period of time, build your business, but build it in a manner that's meant to survive in the long term. That really strengthens your business. Because if you do that, over the course of time, capital will, in fact, come to you. And when we're through this period, the folks in this room and our businesses are going to do extremely well. Extremely well. But we have to do it cooperatively, working together, partnering, because the stronger we all are, frankly, the better we're going to perform in the markets, the better off our industry is going to be. And so I wanted to leave a minute or two if there are any questions, but that's my view of where we stand in the capital markets. Do I have a minute or two, Irene? Any questions? Anybody?
Yeah. What about tax loss harvesting and the SEC's wash sale rules? I haven't seen anything since December last year, and I'm not sure where we stand.
So I've got a bad answer for that. That is so above my pay grade that
above yours.
I guess so. So we try to be profitable, so I don't have the tax losses that I'd like to have. Last year we actually paid income tax, which is really bothersome. That one is beyond my technical capabilities. I apologize. It's the old know what you know and know what you don't know. One more, if anybody. Well, I know my friend Fred's going to get to address that one. And so, look, the way we view it is very practically, okay? we do think that Bitcoin is an appreciating asset, especially from this level. That said, it's really a cost of capital question, right? Right now, if we were to try to raise equity for our company, for example, we're selling stock at less than $2. So we're off 80% from where we went public. And I would tell you that our stock is actually a levered bet on Bitcoin. So if I believe that, if Bitcoin doubles from 20 to 40,000, our stock is going to quadruple, which is what I believe, and I could run through the math with you, but I won't take the time, then we're better off to sell Bitcoin right now to fund our growth, which we're doing, than we are to hold the Bitcoin and sell our stock to fund the growth. It's just a corporate finance analysis. In an ideal world, look, I think that the public markets like an aspect of our companies when we're holding some Bitcoin. I think that the public markets believe in the asset value appreciation. So if the world were perfect, frankly, I think that we would be balancing holding the asset as much as we can versus financing from other sources. I can see I'm getting the hook. It's nice talking to you all. Have a great conference. Again, thank you, BITMAIN.
Mike, does the microphone still work?
Thank you.
Thank you, Mike. You did a great job. Thank you, Mike. You did an amazing job, and no one's getting the hook. That's you guys saw nothing. Okay, so really quick, Mike touched upon a very important point to everyone in this room. A lot of us, when we see bear markets, we think we got to go with the market. It's time to rest and relax and wait. But now, if you're in this industry, if you're in this room, now is the time to build mining farms. You have an opportunity to finally get transformers, to get the infrastructure that you need. Now is the time to build. So I think it's really important that Mike mentioned that point. Our next speaker is another person who needs no introduction. He is one of the largest miners in all of the world. Mr. Fred Thiel, the CEO of Marthon Digital Holdings. Fred, come on up. I'm just going to give you the podium, Fred.
Okay, thank you. Morning, everybody. It's always tough to come after a speaker like Mike because he's so eloquent about covering kind of the key important parts of the material. I do want to definitely echo, as Mike said, thank you to BITMAIN, Mr. Du and Mr. Joe. Thank you, Irene, everybody. We really appreciate the partnership. We value very much the partnership, and we value what you do for the industry, so thank you. We think the other services your group with AntPool and AntAlpha are delivering are very compelling for the industry. You know, what's unique about this industry is we're all actually in this together. It's not like we're competing against each other for a particular customer or that we each sell different solutions. We really just compete on capital, and we're all trying to do the same thing, which is mine Bitcoin so we can further secure the network. So it's great to have a company like BITMAIN who really is investing in the industry and the ecosystem, so thank you. I'm going to talk about a topic that Mike sort of touched on, which is really, you know, to hold or not to hold, or to hodl or not to hodl. You know, is that really the question? And in times like this, where we are today in the market, it's really important to focus on smart financial management of your business. You know, when Bitcoin is doing nothing but going up, it's really easy to just keep investing, and when capital is available, you know, it's just a flywheel, you keep going. But shit happens, as we can see right now from where we are in the marketplace. And so it's really important to adopt a more pragmatic financial perspective. And maybe it's people with kind of more gray hair who've been through cycles, who have learned these lessons the hard way, who may seem more conservative in their approach, but that conservative approach sometimes pays off in the long run. So what I'm going to talk about today is kind of a way that we view whether we should hold or sell Bitcoin, and when it can make sense to sell Bitcoin to finance your growth. Because I do agree with Mike, there is no better time to build than in a down market. When we placed our initial large orders with BITMAIN, it was in late 2020. And machine prices, rig prices were really low. And what we're seeing now is another opportunity where not only have prices come down, but also hosting capacity is more readily available. Granted, energy prices are very high right now. But if you can manage how you arrange your hosting and power agreements, there's no better time to invest. So, safe harbor statement, we're a public company. You can read this if you want to, but this basically says that what I'm saying here won't be non-public material information, et cetera. So, the proverbial line from Shakespeare's Macbeth, adapted for Bitcoin. To hodl or not to hodl? Is that the question? Well, it kind of depends. There are times when it makes sense to hodl, and there are times when it doesn't. Charles Dickens wrote a book, The Tale of Two Cities, and the opening line of that was, it was the best of times, it was the worst of times. And we're kind of in that type of a market today. So in the best of times, miners are focused on growing and hodling. Capital is readily available. Look at last year. Mike touched on the numbers, right? Cost of capital was super cheap. Everybody was throwing money at you. Energy prices were low, and capacity was abundant. It was easy to grow. People invested in infrastructure. They placed orders for miners. Well, the capital markets giveth and they taketh away. They pull the rug out from under you. If we look at how the change in capital markets has flipped in the last 12 months, it's amazing. Last year in November, we raised roughly $750 million in a convertible bond offering at 1% interest, unsecured, that converts into Marthon stock at a price of $76 a share. It most probably got priced at one of the top 3 days for our share price in Bitcoin last year. Super cheap cost of capital. And when your share price is going up at an accelerated rate, your cost of capital is fairly low. But in a market when it comes down, things have flipped. Debt is double-digit for most people today if they're financing miners. Cost of capital is high. Equity markets are very hard to tap right now. And it's hard to raise money. And in the worst of times, miners focus on having to sell their Bitcoin to finance their growth. And when you think about it, selling when the market is down towards the bottom is the absolute worst time to be selling your Bitcoin. And so is there a better way to think about this? And yes, there is. So selling's typically been reactionary, not strategic. If you look at the small chart on the left, the publicly traded miners have sold off 23% of their Bitcoin in the last month alone. That's a pretty substantial amount of Bitcoin. It's over 10,000 BTC. Now, if they had been managing that Bitcoin all along, they wouldn't all have been hodling. They would have sold a portion of it along the way. And they likely would have been in better shape. But I think all of us were drinking the Kool-Aid last year and thinking, Bitcoin's just going to keep going up, and then after the correction, it'll keep going up again. But nobody really knows where this market's going to be. And so we need to adopt a form of financial planning that's a little bit more prudent. So what can we do better? For those of you who are finance people, weighted average cost of capital is a formula you use for basically determining what is the threshold at which an investment has to return, pay back, such that it covers the cost of the capital you're going to invest in that deal. Now, the formula here has a small little error between the two brackets of the first set of brackets and the second. There should be a plus sign, so I apologize for that. But essentially, what you're trying to do here is figure out what does it cost me to raise capital, to invest in miners, to invest in hosting capacity? And what does it cost me to hold the Bitcoin that I hold, or should I sell it? So think of it as it's a threshold. It's kind of like if you go to your investment advisor and you say, listen, I need to get 7% after-tax return to be able to retire when I'm 65, et cetera. That's a threshold, it's a hurdle rate they're going to have to try and meet in their investments. The weighted average cost of capital can be a little complicated if you're a public company because you've got to worry about the value of the equity and things like that. If you're a private company and the only cost of capital you have is essentially debt, then it's a lot easier. You just look at what does it cost you to service that debt from a perspective of cash flow and interest rate, and can you afford to generate a return that's greater than that debt? Think about all the people who invest in real estate. That's essentially the model they do, right? You find a piece of real estate, what's the cap rate? You know, how much do you have to borrow to invest in that real estate? What are the rents going to return to you, and are you going to make a profit at the end of the day that lets you service the debt and after tax generate a profit? So you have more capital to invest in other things. Weighted average cost of capital is essentially the same calculus, but you're also including the cost of equity, because as a public company, our shareholders are expecting a return. And while we don't pay a dividend, most public companies don't, they're expecting the share price to increase and the value of the company to increase such that their investment is going to generate an expected return. And that expected return is typically viewed in the marketplace, if you would, as a multiple of earnings and growth, right? It's your kind of PE multiple. So you calculate your weighted average cost of capital, and that tells you what any investment you make, whether it's new miners and hosting capacity or whether it's holding your Bitcoin, whether you should do it or whether you shouldn't do it. Because if the return on an investment, when you risk adjust it, is going to generate less than your weighted average cost of capital, you're actually losing money. So how do we simplify this? Well, rather than asking whether you should HODL or not, first question, can you afford and do you have the capital today to cover your operating expenses, pay for your power, pay for your employees, pay for your CEO salary, et cetera, and the CapEx you're investing in? Do you have the cash available today to invest in the miners and the infrastructure or not? If you don't, then you need to look at the next question. Is the Bitcoin price going to grow faster or higher than your weighted average cost of capital? So if your weighted average cost of capital is, let's say, 20%, then the price of Bitcoin has to go up by more than 20% if you're going to hold it. Otherwise, you should sell it. If you don't have to worry about funding OPEX and CapEx, then as long as the price of Bitcoin is growing at greater than 0%, or if you really wanted to look at the kind of safe hurdle rate for capital, you could take that Bitcoin and invest that cash somewhere else, whatever that hurdle rate would generate for you. It's maybe 7, 8%. Then that'll help you decide whether you should hold or whether you should sell. So here's an example. Company has $20 million of debt. Their equity is about $80 million. It's the value of the company. The cost of that equity, meaning the expectation investors have, is that it'll grow at 20% a year. Your cost of debt is 12%, and your tax rate is 25%. You do the math, you end up with 17.8% as your weighted average cost of capital. Any investment you make has to generate more than 17.8%, or else it doesn't make sense. So if a mining company believes that the price of Bitcoin is going to grow at a faster rate than the 17.8%, it can make sense to HODL. Otherwise, they should sell the Bitcoin and use that to invest. It's pretty logical. So here's another way to look at it. Over a 60-month period from 2020 to 2025, 3 different miners. They have 500 petahash of capacity at 30 joules per terahash, paying 5 cents per kilowatt hour for electricity. One sells 100% of their Bitcoin, one sells 50% of their BTC, and then one HODLs everything. Here's the interesting thing, and this is basically based on BitUda's projections for hash rate growth and the price of Bitcoin. The seller who sells 100% of their Bitcoin will generate about $101 million. The HODLer will only have about 91.5 million of Bitcoin, of profits from that. And the seller of 50% of their BTC will actually end up with the highest return, 115 million. And again, this is driven by your weighted average cost of capital. So as you think about holding or selling Bitcoin, get smart, look at the financial calculus, figure out what your weighted average cost of capital is, and decide, should I sell my Bitcoin, or is Bitcoin going to grow at a much faster rate than my cost of capital? And should I therefore hold my Bitcoin? And for how long? So it's all about being strategic. And with that, thank you very much, and I'll take whatever questions anybody may have. Great. So the question was, don't you run the risk of being a speculator? By being a miner, you are a speculator, right? If you're even considering selling hash rate to somebody, you're speculating. By owning and holding Bitcoin, you are speculating. It's an asset, and you're speculating on its growth rate. Who better than a miner should have an understanding of where global hash rate's going to go and the price of Bitcoin? Much better than the layperson. So it really is a question of, are you willing to place a bet on your assumptions being right of where the market's going or not? If you don't feel confident in your own choices and your assumptions, then just sell your Bitcoin. That's your safest bet. But if you have a good feeling for where the price of Bitcoin is going to go and where the global hash rate's going to go, then it's easier to do. So great question. Other questions? Yes? Hedging or lending out your Bitcoin? Well, let's just say yield farming is not such a popular topic these days. And lending out your Bitcoin typically has, there's always counterparty risk, right? So there's this concept in finance called the risk-adjusted return. Right? And it's, people say, well, you know, private equity and venture capital returns much more than private equity. Well, it's actually not true. They're about the same when you adjust it for the risk. So with hedging, you know, you have to look at different hedging strategies. You can do call option straddles, which is a great way in an up market when there's good contango in the marketplace. You can lend out the Bitcoin. If you lend it to a reputable third party who has a strong balance sheet, it's going to be very small return rates. And so you have to really think about other ways of generating yield on it. But most probably the best strategy in a long market is selling just options on your Bitcoin. Especially out of the money market calls at 130, 140%. I'm not giving investment advice, by the way. This is purely my opinion, so caveat on that. But great question. Any other questions? One last one? Okay. Well, we are done. Thank you very much. Appreciate it.
Fred, thank you for giving us an amazing opportunity to listen firsthand to advice from an expert in the industry. It's not many chances that we get to break down this question, and from what I can see, it's not an easy answer to hodl or not to hodl.
Finally, at the end.
Next up, we have an exciting panel discussing what the future is for mining in North America.
Life wanted something.
This panel is not ready yet, so I don't know if I'm going to be announcing everyone yet, but
Hive's doing great. So.
It's coming soon.
It's a big fight. You're used to all the fighting.
In 5 minutes? Yes. 2 minutes? It's ready? Yes. Now? Okay.
Yeah,
so,
it's insane. It's a lot of work.
Our moderator for this panel is Iggy Liao, Hive Blockchain's VP of Strategic Partnerships. Iggy, wait, am I supposed to call everyone on stage now? Okay, welcome Iggy. Everyone, give a big round of applause for our panelists. We have Iggy Liao, Hive Blockchain's VP of Strategic Partnerships. We have Darren Feinstein, co-founder and co-chairman of Core Scientific. Chase Lockmiller, CEO and co-founder of Crusoe Energy. And Eric Yang, Atlas's Technologies CTO. All right, everybody, we'll give one last round of applause and we'll get started. Iggy, you're on.
Yep. Good morning, everybody. It's my pleasure to be here. Thanks to BITMAIN for inviting all of us. Darren, Chase, Eric, it's an honor to be on stage with you. Hopefully we'll have a informative session for everybody today. We have a few questions that I'd like Darren, Chase, and Eric to answer to the benefit of the whole crowd. So without further ado, let's do it. You guys okay?
All right.
All right, let's do it. So the first question I have is a typical crypto question, POS versus POW, which is an eternal debate. A lot of people say that proof of work is way too energy intensive, and proof of stake is much less energy intensive. So what are the real differences in your mind between POS and POW? And what are the benefits, the real benefits of POW versus POS? We'll start with you, Darren.
Thank you. Thanks for having us, and it's a pleasure to be here. Thanks for BITMAIN for hosting us, and good to sit down and finally see you face to face, Iggy.
Yeah,
I know we've all talked, all of us have talked a long time, and it's good for us to get together. I think we're getting into one of the most difficult questions that is commonly misunderstood, which is what is proof of work, right? And what is proof of stake? What's the difference? And then the energy footprint question, I think all of us could talk about for the rest of this panel. So.
Yeah, you're very vocal about that on Twitter, so I know.
Yeah, there's a lot of misdirection going on.
Yeah.
I think proof of work and proof of stake, in terms of how to explain each of them, it's very important to understand what the problem is and what the technology is solving. And so with proof of work, what the problem is solving is a problem that's existed for all of human history, and it's existed as a result of the stakeholders. And so you have proof of stake systems that have come into existence since humans started getting together to create entities. And the problem with those entities is if you rely on the entities, the stakeholders, they control and they can manipulate the entity. And so if you're relying on entities to provide you any type of truth, the truth is manipulated. It can be changed, it can be altered, it's not immutable. And so proof of stake systems have existed for centuries, and the proof of work mechanism, this new consensus mechanism, which was created in 2009, was a solution to the proof of stake problem. And so they solve different issues and different pre-existing conditions. And so the proof of work network, what it solves is the ability for humans to rely on a ledger or on information without it being alterable by the stakeholders. And so for the first time in human history, you have an unalterable ledger, which is written on a proof of work consensus mechanism. Satoshi called it a time chain. And so there's a lot of confusion on what is a time chain, what is a blockchain, what is proof of stake, what is proof of work. But very clearly, they do not solve the same problem. They are entirely mutually exclusive in terms of the data reliability. And as you move down the rabbit hole of what is proof of work versus proof of stake, it becomes fairly evident that the accounting innovation, and talking about accounting I won't bore you guys with, but the accounting innovation is the most important innovation in the proof of work consensus mechanism.
Yeah, I agree with you on that one. Chase, what do you want to add on that one?
Yeah, I think it's an interesting debate that's sort of happening, but I guess my perspective on the whole matter is that the energy intensity of proof of work mining isn't necessarily a bad thing. I think it's actually sort of a benefit because it provides additional layer of security to actually attack and for attackers to basically invest and go through to actually do anything nefarious to a proof of work blockchain. So I kind of view it as through this perspective that by virtue of it requiring significant infrastructure costs, by virtue of it requiring large amounts of energy, it's an actual it's a benefit, not a bad thing. So generally I think that I guess the notion of proof of stake, I think there's a lot of conversation around the fact that it cuts the energy cost, but I think that's actually opens it up to new attack vectors for people to attack those networks.
Yeah, much easier when it's controlled by less, a smaller network.
There's fewer people controlling it.
Yeah.
They have sort of these embedded vested interests.
Absolutely.
In it, so.
Eric, you guys, at Atlas, I guess you're pro proof of work if you're doing what you're doing?
So from my standpoint of view, I think from protocol level, the different protocol has different positioning. Like a POW, like Bitcoin, the position is that you want to be a peer-to-peer electronic cash system. So what matters to the system is the security and decentralization and the permissionless. Like every single miner node can be like contribute to the hash power, and it's permissionless. Anyone just run a node, Bitcoin core node can be a miner, right? And there's no like qualification or precondition. And for POS, I think its positioning is like to support more the apps for applications. Yeah. It's so different because to support more apps to provide like robustness, powerful infrastructure, it needs more like throughput and scalability, those kind of things. But Bitcoin is different. Now, in other hand, for POS chain, it's kind of a compromise on decentralization and permissionless. Because in POS protocol, it's the validator nodes serve as the miner in POW protocol, right? The validator nodes and the miner the blocks and verify the transactions. And only the qualified one can be the validator node. That mean, by that I mean, to be a validator node, we have to stake some tokens, and only maybe for some like protocols, only the top 10 validator. The stakers can be the right-hand nodes. And so from that perspective, I think it's like compromise on the decentralization and also the permissionless. Yeah. So like Bitcoin, from my perspective, I think it's more like secure because everyone can contribute to the hash rate can secure network. That's the essential difference.
So do you see it as like true democracy or something like a way of really?
Yes, exactly.
Yeah. So this next question is it's like a segue. There's a lot of articles out there. We all know about the energy FUD that we see all around now on the internet, on Twitter, in the mainstream media. There's some people that say that the Bitcoin network consumes more than a small country. What is really true about this? And I know you guys are very, you look at the whole industry in general. What is true, what is not true? How do we mitigate all this FUD? I'm gonna start with Chase. You're very much into energy.
Sure.
So how do we stop it?
So I guess my perspective is not to say that it's not that much energy in the grand scheme of things, but because Bitcoin mining does require a massive amount of energy, and but that massive amount of energy is worth it to sort of defend this global monetary ecosystem that's been created and sort of the value that's been created by this new technology in Bitcoin that has been developed over the last 12 years or so. And I think there's a lot of mechanisms and superpowers that Bitcoin has that actually make it a key component to building out and developing the future energy infrastructure that we need to support the electrification of everything. I mean, you talk about EVs and smart everything. It's going to require us to develop innovative ways towards developing the energy infrastructure to support all of that. And Bitcoin to me is like the greatest money ever invented, right? I mean, it's money that's backed by energy and technology, like the two things that have fueled the advancements and developments and increases in human prosperity for the history of time. So I think it's actually a huge positive that we're able to create this new monetary ecosystem that way. I think the two key criteria is that one, it's permissionless. He touched on, so anybody can really contribute.
Yep.
And two, as a computing workload, it's the most interruptible computing workload in the world, when you compare it to other sorts of, cloud computing type workloads. And so where that fits in, in the energy infrastructure picture is that, there's a lot of just benefits that it can provide in terms of being an usher into this new, energy future. At Crusoe, we're focused on capturing waste methane sources. And methane is a ultra-potent greenhouse gas, traps 84 times more heat in the atmosphere than an equivalent amount of CO2. So our ability to capture that waste methane and utilize it to power low-cost distributed computing infrastructure is an ultra-powerful tool that's actually creating a net negative CO2 equivalent emission. So like our current footprint, today, accounts for, the equivalent of taking roughly 170,000 cars off the road. So it's actually a meaningful, step in the right direction as far as like reducing net emissions and sort of helping usher in this new energy future. I think there's a lot of really amazing things, that can be done with the interruptibility and how Bitcoin infrastructure can really play with, energy grids to create greater stability. You're seeing it in Texas and, all of the Texas-based miners. I applaud, all the work that you guys are doing to stabilize the grid during, this very challenging moment with, big heat waves and massive demands from the grid. And without that, curtailable workload, it actually, creates more fragility in the overall energy grid infrastructure. So I think there's a lot of ways that sort of Bitcoin can actually be a huge net positive in terms of advancing a lot of our global energy goals. But a lot of these stories need to be sort of communicated and be received with curiosity and actually openness and from the broader public instead of pitchforks and whatever going after this new work.
Eric, do you see the same like in the mainstream media?
I'd like to do some calculation. Actually, I think Bitcoin use 50 times less energy than traditional banking. And also, Bitcoin miners naturally seek out stranded energy resources. And a large percent of them are like clean energies. And also, some energy sources are otherwise wasted ones if Bitcoin is not there. So I think in that perspective, I think there's no reason to complain of Bitcoin mining.
At Hive, it's a big challenge for us to try to educate the public. I know, Darren, you've been on the Bitcoin Mining Council, been very vocal about it. What are the actual numbers? Like, what's the number that we've been talking about and the Bitcoin Mining Council has been researching?
Thanks for laying that out. It's really a really good point. There's kind of a dichotomy going on here when you talk about energy. A lot of people like to talk about the value of Bitcoin and forget about the energy footprint. And then some people like to address the energy footprint, and you kind of see them at odds at some points in time. The problem with it is it's very, very difficult to explain the benefits and the value of Bitcoin in a short time span. It's a very complicated network. And so what I've found has been helpful to me was to address the actual energy footprint, not the make-believe energy footprint that you hear on the mainstream media. And so Bitcoin has value. That's a different discussion. What is the actual energy footprint of Bitcoin? And as you asked, what are the actual numbers? And for anybody in this industry, understanding the actual numbers of the energy footprint of Bitcoin is massively important to sustaining this network in whatever geographic region that you're in. Outside of your geographic region, Bitcoin doesn't care. Doesn't care if the regulators within your jurisdiction embrace it or chill the technology and run it out of the country. It will just go somewhere else, as we saw in China, that's more open to freedoms that are provided by the network. So the actual energy statistics are this. The most important statistic first to understand is how much energy is generated globally. How much energy is available for humans to use around the globe. And we know the number. We know that number. British Petroleum, Exxon, all the big energy generation providers, they all put those numbers out every year. That number is approximately 250,000 terawatt hours of energy a year. 250,000.
250.
Is it 250? Anybody? Here it is. It's 160,000. My bad. It's 160,000 terawatt hours of energy a year, approximately. The Bitcoin network, right? How much energy does the Bitcoin network use of that 160,000 terawatt hours of energy? Well, the World Economic Forum in 2017, they put out an article when Core Scientific was building its first large-scale facility in the Appalachian Mountains. And when the article came out from the World Economic Forum, the World Economic Forum said this. They said by the year 2020, so it's 2017, within 3 years, if you don't shut the Bitcoin network off, by the year 2020, they literally said, and you can look this article up, the World Economic Forum said, by the year 2020, the Bitcoin network globally will consume all of the world's energy, literally all of it. And then Newsweek ran with the same story, and so we're building this large-scale facility, and the mayor and the people in town and our investors came up to me and they said, what's going on? We can't be a part of something that's going to utilize all the world's energy. We need to have a conversation. And so if you look at the predictability of the World Economic Forum, and they have, very well funded, and you look at the mainstream media articles that came out surrounding that, and to this day still continue to come out, they all come out and they say, as you said earlier, Bitcoin network uses more energy than a small country. Well, we know how much energy is generated globally, and I apologize for mixing it up, it's 160,000 terawatt hours a year, and you saw the World Economic Forum say Bitcoin network's going to utilize all the world's energy. So here we are in 2022. We're not using all the world's energy, right? Because the lights are on and we're in the middle of a panel utilizing energy. But how wrong were they? Well, we know how much energy is used by the Bitcoin network globally. Even the detractors agree on this number. It's approximately 250 terawatt hours of energy a year out of the 160,000 terawatt hours of energy that are generated on a yearly basis. It breaks down to about 15 basis points, 10 to 16 basis points, depending on what ultimate numbers you use. And a basis point is 1/100th% of the world's energy. And so you get 15 basis points is 15/100th of the world's energy that's generated. And of the 160,000 terawatt hours of energy that's generated globally every year, 50,000 terawatt hours of that energy is wasted. It's wasted because it's unused, and it's wasted because of the transmission lines, and it's wasted for a whole other variety of reasons. And so when you look at the Bitcoin network energy footprint on a global basis, it's inconsequential. It's inconsequential. People mix up local and regional energy use, which is not inconsequential because you need to have enough energy generation and transmission lines to bring the power to the Bitcoin mining facility in whatever region you're in. So globally, it makes no difference how much energy this network uses. It's inconsequential. Yeah. But locally and regionally, it does matter. And you need to make sure that you're good corporate citizens on whatever grid that you attach to.
That's great. Well, speaking of being good corporate citizens, what do you guys do to secure the grid or to help the grid to be more stable, I guess? I think you guys are really big miners, so what do you do to help secure the grid? I'll start with Eric.
Well, I think miner actually serves as a special, like a great battery, especially because miners always have kind of a naturally to seek out stranded energy sources, and in many places their electricity is not used up. It's kind of like waste, just you mentioned, waste, and also electricity transportation is very expensive, and at miner we use more energy when the demand is low, and you use less when it's high, and so it's kind of like I regard it as kind of like batteries, and it helps the grid to smooth out
Great. Trace?
So, 100% of our footprint today is completely off-grid, capturing sort of those waste methane sources. But we are evaluating certain grid-connected opportunities, and I think Bitcoin has a major role to play in terms of unlocking value from a lot of that stranded and unused energy with proof-of-work computation. But just a couple of statistics. I think, in Texas last year, I think 4% of renewably generated electrons were actually priced negatively. So, clearly there's there's an imbalance here where there's actual, excess waste that could be harnessed in a way that, creates, beneficial strengthening for the overall Bitcoin network. I do think it is a bit disingenuous to say that, Bitcoin mining is like not using that much energy because, at the end of the day, it's like, it is using a lot of energy, and we, all of us miners, we're all focused on, what are our power costs? The reason we care about power costs so much is because we use so much power. I do think that, Bitcoin can be a catalyst to actually help develop more energy production. I think there's this notion of, we should be using less, but, I think the real solution is that as a society, we should be developing technology to produce more, to create surplus and drive human prosperity for everyone by, having access to more energy. I think that's been the number one driver in sort of uplifting human quality of life has been access to energy, and Bitcoin can be a big catalyst in terms of advancing a lot of those initiatives further.
Yeah. Well, like Darren said, you want to be able to produce as much power that the network needs to, but also grow the network at a good rate. What does Core Scientific do for the grid?
I think and I appreciate the question, and the actuality is, anytime you have an interruptible load on an electrical grid, you make the electrical grid stronger because you're buying excess energy or you're causing excess energy or new generation facilities to come online. And as you buy that energy, you're creating a market for the energy. And if you utilize it and you're willing to shut down,
when you can,
as there's there's emergency events, there's controlled load events, there's economic events. If you're willing to shut your energy intensive on a local basis facilities down, then you're giving that energy back to the grid, and you're potentially stabilizing it from harm. And so anytime you have a Bitcoin mining facility on an electrical grid, you're making that electrical grid stronger, because if you shut down, and this is the only reason, if you shut down a Bitcoin mining facility that's on an electrical grid, what happens? Nothing. Nothing happens.
Nothing.
If you shut down a traditional data center that's utilizing significant local energy on electrical grid, like AWS or Azure or an Equinix, what happens if you shut down a traditional data center? Well, people are going to die because they're running the traffic lights, they're running air traffic control, they're running all types of systems, hospital records, they're running important information and computations or data that cannot be turned off, whereas we can turn off in a moment's notice. And so Core Scientific, in the multiple states that it operates in, has agreements with the electrical companies that we will shut off within a moment's notice if there's grid stress.
Great. We do that as well at Hive. We're very proud of that. We can shut down like in a minute, so very cool. So now we're with BITMAIN today and with other manufacturers tomorrow at Mining Disrupt. What is the role you guys think of the whole ecosystem of hardware manufacturers, of power manufacturers, infrastructure manufacturers? How are they going to help us in the future grow? And are they going to partner with us in different ways, or should they partner with us? What is your view on that? I'll start with Darren.
Yeah. So as the Bitcoin network grows and as the companies grow within its ecosystem, we're going to see catalysts to have lots of different people working together that are going to be important to the network. Yeah. So we're going to see that continue to grow.
Yeah. Chase, you've been working with BITMAIN for a long time. Like, what's your view on that?
Yeah, I think BITMAIN, now and will continue to be, a critical component to just sort of building out the infrastructure that, enables this globally decentralized, monetary ecosystem. I think there's a lot of really cool, other aspects, that BITMAIN actually and Bitcoin really drives in terms of advancing broader scale computing applications by increasing demand for the most cutting edge silicon process. I think it actually drives more production capacity, like over time. I mean, these are multi-year type investment cycles, but by BITMAIN being able to be a big buyer from TSMC, for instance, it actually helps enable more capacity and more investment into the foundry space more broadly, which benefits all computing tasks around the world. So I think there's a lot of sort of secondary effects that I think are beneficial, but I think BITMAIN and other core infrastructure providers will continue to play a really key component. And I think the other aspect that BITMAIN I think has really excelled at is being a very customer-focused business and really working with customers during downturns like this, and recognizing that revenues obviously come off a ton. OpEx is going up a lot for many folks around power pricing, and so BITMAIN having some flexibility in sort of navigating a lot of that commodity price pressure has really I think made them stand out.
That's great. Eric, your view on that?
Yeah, I think like manufacturers like BITMAIN plays a key role in this industry, especially in Bitcoin mining, because we hope like BITMAIN can continue to provide energy efficient and like faster machines, and also I think together with the energy company, I expect them to provide more like clean energy and like affordable energy, and also like provide a better management of energy distribution. That will be very helpful for long-term like healthy and sustainable industry.
What do you think about now, going towards the power? Like, what do you think of power producers, power distributors? How are they going to help us? Are they going to be our competitors? Or are they going to get into the as partners? Which Crusoe already partners with some of these power producers. But what do you think the role of the power producers and power distributors is going to be in the next few years or so?
Power.
All right. The power producers, the people who produce power.
A power computer, because I think it will not be like competitive for us, because like I mentioned, the Bitcoin miners are not like we naturally to seek out stranded energy or power resources rather than to compete with most other like electricity consumers. I think that's a difference.
Yeah. Chase.
Yeah, I think it's interesting because hash rate is sort of a different transformation of power. Essentially, it's like you're taking computing hardware and transforming power into this digital commodity in hash rate, and you're able to monetize that hash rate by providing computing power to the Bitcoin network, or selling it to pools or whatever. But I kind of view it as over time, given the interruptibility features, given the permissionless nature of the Bitcoin network, Bitcoin mining creates this extra tool that didn't fundamentally exist before for all energy producers. Whether that's you go to the upstream oil and gas producers that have been dealing with the flaring problem that Crusoe helped solve. This has been a problem that's existed from the beginning of oil production, right? And it's an unsolved problem, and we're able to deliver a solution that's mobile, modular, flexible, that really helps reduce that emissions footprint and helps them monetize something that previously was an unmonetizable resource. I think for more traditional grid-connected power plants, we talked a lot about this flexibility, ability to curtail, create greater grid stability, and actually, there's this thing that I think most most Bitcoin mining deployments behind the meter have been deployed with existing generation assets, but I think there's this next wave of actually Bitcoin mining being an anchor tenant that's going to catalyze new development for more renewable generation capacity, and we'll be able to sort of monetize it in a way that benefits both the miner and the producer by having these flexible load curtailments that Darren.
So they should all embrace it. They should all embrace Bitcoin mining.
Yeah, we should all just hug, man.
Yeah, Darren.
Absolutely, you'll see it being embraced more often on all streams of the upstream on the electrical grids all the way down to the end users. But one of the interesting things to talk about, because there's a visual representation of it right in the hallway, is the history of the ASIC miners, and what BITMAIN did with the ASIC miners, starting with their first version, was they took the energy that went into it to convert it into a terahash, and they over time they've increased the efficiency of those miners by 400 times, so 40,000%. And so you see a 40,000% increase from the first miner, the S1, up until this S19 when you look at joules per terahash. And so the joules per terahash metric for people in the space is important to understand. You're converting energy, as Jason said, into hash rate. And the equipment that you utilize to turn that energy into hash rate, as it becomes more efficient, you're going to see the people that are utilizing the network utilize much less energy to create the same amount of hash rate. And one of the side notes is the reason you see so many negative articles about the energy use of this network is because they utilize data from 2017, 2018, 2014, where they measure joules per terahash on an ASIC, which has increased by 40,000% in terms of efficiency, and they're still using data from back in 15, 16, 17. It hasn't been updated. And so a lot of times you could look at some of these economists or environmentalists that go and cite statistics. They're using really, really old, bad statistics. You have to understand the efficiency rating of the ASICs before you start talking about the energy footprint of the network.
Awesome. Well, speaking of all these old data and old numbers, 2017, 2018, you guys have been around for a long time. You've seen a few cycles. You've seen ups and downs of this whole industry. Where do you think we're heading? Is this cycle similar to other cycles, or is this a new thing? Eric?
Yeah, I think this cycle is different. There are two major shifts. One is the miners shift from individuals to institutions. And the second one is most of the hash rate moved out from China to US. And also, I think that's a big shift from my perspective. And also the institutions entering in this field, I think will shorten the bear market cycle and also changed our previous understanding of the bear market cycle.
Right. Chase?
Yeah, so I think this cycle, where it's different, it's kind of like in the last, bull market run, it was like miners discovered debt and, are like, oh, wow, this free non-dilutive capital. But, obviously, we've seen some unwinding in the space, both in Bitcoin and just more broadly with the greater crypto ecosystem, with DeFi and, many other sort of lending solutions that had added just, a tremendous amount of leverage into the system. And, we're sort of seeing the effects of that deleveraging event, unfold. What's pretty cool about crypto is that, it was able to unfold in a way that was, somewhat rational and fairly rapid. So, for better or for worse. But I do think that, given the unwinding events, I think where this cycle may be different and complex is that, with a lot of the lenders that have been sort of burned in sort of this deleveraging event, I think is going to make it more challenging for formation of capital to invest in sort of the next, bull market run. But, I think it's always a good time to be building, and, I think there's tremendous amounts of, really good opportunities that are out there right now, and, we're evaluating a lot of them, and, we have a strong balance sheet right now, and we're kind of trying to, evaluate sort of the best bets to be making right now.
Darren?
So I've been in the space a decade. Started mining, I think, in 2012, buying Bitcoin in the $50 range.
50? 50? 50?
50.
Okay.
What happened is, to give you guys an old story from 2012, 13-ish, was Bitcoin went from $50 to $200, and all the people that I was telling about it were like, okay, and then it crashed to $100, right? It fell 50%, then it fell to $70. Then the next cycle, it went to $300, and then it crashed to 100, then it went to 1,000, and it crashed to 400, and the people that were I was talking to about this network, they'd be like, ooh, it just fell to $400. Are you all right? It's a scam. I'm like, I told you about it at $50. Calm down. And so what's happening again is the same exact sine curve where you get higher highs and lower lows and higher lows. And as time goes on and people adopt the network in increased rates, I think in 2017 when we were building our first facility, it was estimated there were 2.7 million users on the Bitcoin network. Now it's over 100 million. So we've seen this exponential growth of adoptability by users, and you're also seeing these really cool products being built on layer 2 and side chains, and people coming up with amazing innovative ways to utilize this network that make it easier. If you look at the internet, when you first wanted to turn the internet on, you had to plug it into the wall. It went really slow. Nobody could figure out how to use a browser. We're in the same cycle. Today, if you ask people how the internet works, right? You have 5 billion people on the internet. They have no idea, right?
They don't care.
Very few people know how the internet works. And the same thing's going to happen to Bitcoin. They will come up with user interfaces that allow people to use this permissionless, unalterable accounting record of monetary technology, which is better because the accounting technology is better, and you'll just see it continue to grow in the future. So, as Eric said, the only difference I see, having lived through multiple of these ups and downs, the only difference is for the first time that I've seen, we have institutional adoption. We have name brand companies in the space, MassMutual, Fidelity. Those people are not going away, and once they've done their due diligence and understand that the network changes the world on a global monetary technology and a transactional technology, you're going to see them doubling down, getting more involved intricately on the capital, debt, and equity sides. You're going to see the different capital stacks come out of this, and the companies that emerge, as our CEO Mike Levitt said earlier, the companies that emerge out of this downtrodden, tumultuous time are going to emerge much stronger. And you'll see the next cycle happen after the next halving and the next run up in price.
Jeez, Darren, we could do this all day, guys. I love talking to you. I'd like to thank you very, very much for your time and for everybody's time. Hope you guys enjoyed this. Thank you, Darren. Thank you, Chase. Thank you, Eric. Guess we'll see you next time. Thank you, BITMAIN.
Thank you, bud.
Thank you. Good job. Hey, Eric.
Great job.
I want to thank our panelists for the amazing speech. And if there's one thing you can take away from this, it's that understanding the bigger picture in Bitcoin and energy is crucial. This is one of our smaller events as a regional WDMS, but that means that you're going to have the opportunity to meet people that you would otherwise not have a chance to meet. So I would advise everyone here to take advantage of this opportunity, make new friends, and possibly the contacts that are going to build your business in the future. We're going to take a break for lunch. It's going to be about an hour and a half. Please come back around 2. And if you can, if you're using the translation devices, please leave them at your seats. All right, everybody. See you when you come back.
Thank you.
Welcome back, everyone. I hope you all had a wonderful lunch and had a chance to make friends and meet people. If this is your first time attending WDMS, this is actually one of many WDMS events that we've held. We've had our first WDMS was in 2018 in Georgia. We've held WDMS in 2019 in Germany, and most recently in Dubai. So we're glad to see you back in Miami for this year's WDMS. And now, please join us as we welcome our first speaker for this afternoon. I would like to call to the stage a member of the BITMAIN executive team, the president of BITMAIN's product division, SQ. Let's give her a big round of applause.
各位来宾、合作伙伴们，大家下午好！非常高兴在比特大陆 WDMS 会上与大家见面。我是比特大陆的 SQ。首先，我谨代表公司对大家的到来再次表示热烈的欢迎和诚挚的感谢。也非常荣幸能够在这次会议中能跟大家一起交流一下我们矿场的拓展与合作。以北美为主，我们将持续推进全球范围内优质矿场资源的全球布局。BITMAIN当前正在运行的矿场，依然是以北美市重点，中东、东南亚已经覆盖。已经合作但还在建设中的矿场有欧洲、南美洲、中亚等地区。BITMAIN的矿场合作从初始到成熟，深度整合了比特大陆的技术和资源。BITMAIN团队在矿场设计上深度参与，在产品方面整合了矿场集装箱与矿机，加大了矿场运维团队的力量。相应的矿场合作地区覆盖面已经非常广泛，对不同地区的资源条件以及多样的气候条件，比特大陆的矿场技术上已经能够更灵活地应对，适应当地的要求。比特大陆在金融、技术、供应链、售后等方面有一系列强大的配套支持。对于出现的问题，需要技术、研发、售后、物流等团队协作解决，而深度整合的比特大陆能迅速地响应并解决这些问题。我们持续迭代，降低矿机关键参数焦耳每 T 的10时代。保持矿机产品技术和成本上的绝对领先，同时专注矿场质量和运维水平的提升。比特大陆已经历了多轮加密货币的熊牛转化，交获了不少学会，也积累了丰富的经验，为应对币价波动做了充足的准备，能有效把控矿场合作的风险。我们非常欢迎有优质电力资源的合作伙伴们与我们展开进一步的交流与合作。BITMAIN战略推广水冷产品，将规模挖矿导向水冷时代，针对性解决高温高湿地区矿机运行不稳定的问题，大幅提升矿机的使用寿命，降低运维难度与成本。未来水冷矿场的比例会非常高，有大量的水冷矿场的需求。为加大布局水冷矿场，我们现行行情下面，比特大陆在支持矿场和电力资源都来与我们合作。我们有完整的生态战略合作伙伴。矿场合作方面，不用担心没有客户，也不用担心没有机器，更不用担心回不了本。水冷产品具有行业最优的挖矿经济性，高性能、行业最低焦耳每 T 的水冷矿机，在线稳定率高，运维成本大幅降低 ，PUE 接近 1.03 等优势，托管我们客户的机器，会给矿场合作方大幅降低生产经营的风险。另外，为降低水冷客户 的进场难度，我们推出了水冷集装箱的技术合作模式 ，Consent to Own。通过降低水冷矿场的初始建设投入，我们在矿场建设初期，矿场合作伙伴无需付款，BITMAIN向其提供水冷集装箱。矿场建设后，通过优惠对应集装箱价值的托管电价，为 BITMAIN 托管12个月的托管服务。优惠对应集装箱的价值后，矿场合作方得到了集装箱100%的产权。托管期内，矿场合作方优先享有购买水冷矿机以及运行稳定的水冷矿机的权利，也可以选择托管期满后持续按市场单价提供托管服务。比特大陆致力于绿色能源挖矿的生态建设，为江后挖矿所消耗的能源全面导向绿色能源，积极贡献自己的力量。在全球双碳目标指引下，世界主要经济体都掀起了新能源发电基础设施建设的高潮。比特大陆在全球范围内大力拓展绿色能源、水电、风电、光伏、托管矿场资源。未来新能源消耗所占的比重会快速增加。近年来，我们在水能、风能、光能等新能源发电领域积极行动，储备人才、积累技术，利用水能、风能、光能等新能源发电智能化削峰填谷，将波动性强、品质差的风电和光伏转化为输出稳定的高品质电力，就地建设矿场，为实现新能源绿色挖矿提供整体的解决方案。采用优化算法模型，以储能系统为补充的智能削峰填谷，将波动性大的风电和光伏电能转化为输出稳定的电力，彻底解决新能源发电侧的供电波动性和不稳定性的问题。另外 ，BITMAIN 目前也在开拓将海上风力发电融入挖矿的可能，希望能够就此建立起全新的行业未来。在这些方面的技术认证和产品开发目前成效显著。作为一家有全球影响力的企业，比特大陆承担起了自己应尽的社会责任，积极响应碳达峰、碳中和的工作号召，购买了近130万吨碳排放指标，为双碳事业做出贡献。大家应该也关注到了，比特大陆近期开启了历史第1代机型 S1、S2 的有偿回收工作，类似的工作，我们后续还会继续开展，回收其他的历史机型。在矿机热能回收、再利用等方面，我们也积极探索，比如在寒冷地区收集利用矿机热能给居民和收测大棚供暖，有效减少石油、煤炭等传统的能源使用。比特大陆高度重视提高客户的售后体验，为了能让客户更加便捷、优惠地享受售后维修的服务，彻底解决大家购买矿机挖矿的后顾之忧，我们制定了一个极具挑战性的目标：返修的周期需要大幅的缩减，售后维修的成本需要大幅的下降。为了达成这一目标，我们今年要在美国、东南亚、中东、欧洲、俄罗斯等地区扩大大量的官方授权维修网点和配件备件哈宝仓的建设，从而大幅提升维修效率和降低维修成本。比特大陆也非常欢迎有实力、有意愿的维修服务合作伙伴和我们合作。我们有完善的配套资源来帮助维修的合作伙伴快速提升维修能力，顺利开展业务。上面是我们维修授权网点的引入条款，主要有工程师的数量、注册资金、场地以及硬件设施的要求，也有合作方的主要权益，包括优先购买维修配件和物料，并享受优惠折扣、新机型点对点的维修技术指导、免费的蚂蚁培训、全球维修业务的拓展等等。今天的分享就到此结束了。有关矿场拓展和合作的售后维修合作的问题，大家都可以联系我们的商务团队。 然后谢谢大家，谢谢。
Actually, is it possible to put that last slide back on for a moment? No? Okay. Thank you, SQ, for this amazing speech. Actually, this slide, if you guys will take a look at it, is important if you're interested in minor repairs or opening up a repair center. This QR code will get you in contact with, I believe, the head of the BITMAIN repair center business. So it's a good chance to get connected and to learn more about minor parts. Okay, that's good for that. And now we're getting ready to have a very special section of today's event. Being that you all are here in this room, we're blessed to have you, and we're about to have our lucky draw. And I think that if you're not in this room and you win, you don't win. So it's good to be here. Okay. Okay, yep, right there. Oh, here, closer to the. If we can move, we can stay closer to the stage. Yep. Okay. There we go. Yeah. Okay. All right. Let's take the first number. Dun 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 dun. Okay, I don't know why I'm singing a wedding song. And the winning number is 0418. 0418. Does anybody have this number? 0418. Is there a zero? Come up. Juan, welcome. Congratulations. Everybody give a big round of applause for Juan. Juan is with Digital Assets SA. Come up on stage. And Juan is the lucky winner of an Ant Miner L7. Congratulations, Juan. Okay, so that was exciting. So one prize down, and there's actually a super secret special prize that's coming now. So if you are in the room now, you are among the lucky few to get this one. So let's take this one. Okay. I'm not going to try to hum a song this time. Okay. So the number is 0, 4. How many are still in the game? Okay. 0, 4, 3, 6. Do we have a winner? Do we have a winner? Shu Wang, do we have a winner? Oh, wow. Okay, come on up. Everybody give a big hand of applause for Shu Wang. Shu Wang has won 5 S19 Pro Hydros. Thank you very much, Shu Wang. It's good to see you here at today's event. And SQ, thank you for speaking. Okay, so now we're going to get into an exciting talk. You're not going to want to miss this one. Coming up now is the evolution of Bitcoin mining in capital markets with Brandon Bailey from Galaxy Digital. What? Wait, did I go early? No? Brandon? No? Do we have Brandon Bailey? Yes. Oh, Brandon, come on up. Everybody give a big round of applause for Brandon Bailey.
Good afternoon, and thank you to BITMAIN for having me. I'm very excited to be here today among some of the best companies building in the Bitcoin mining industry. My name is Brandon Bailey. I'm an associate on the Galaxy Digital mining team, and I'm here today to talk to you about capital markets in the Bitcoin mining industry. Galaxy is a diversified financial services business with mining as one of 5 main business lines. Our mining business has 2 main focuses. We mine Bitcoin, and we also provide financial services to miners. By actively participating in the network, we maintain a first principle approach to create best-in-class products. Our hands-on technical experience allows for depth and breadth of knowledge, creating an optimal operational expertise, which transfers over to our ability to finance miners in the space. We leverage the broader resources of Galaxy Digital to connect Bitcoin miners to custody, trading, hedging, and financing in one integrated package. We meet miners where they're at, regardless of size or scale. We are committed to providing Bitcoin miners with a comprehensive suite of financial services and products. These include asset-backed loans and leases, project financing, equipment financing, treasury management solutions, capital optimization strategies, hedging and trading solutions, and more. In this challenging environment, we continue to focus on helping miners grow and scale their business in a sustainable manner. If we think about the current environment, there have been certain events that have and continue to shape the mining landscape. The first being the China ban on Bitcoin mining. At one point, as much as 75% of mining took place in China. After the ban, more than 50% of Bitcoin's network hash rate dropped off the network, and by the end of 2021, the network had completely recovered these losses. I think we can all agree that this act highlighted the resiliency of the network and of miners within the space. Miners have always been agile and gritty. Affected miners were forced to reevaluate their geopolitical risk management strategy on the fly. The second major advent was public mining companies coming into the foray. At the beginning of 2021, there were only 2 publicly traded mining companies listed on the NASDAQ. Today, there are now over 18. This trend not only allowed for greater liquidity for these companies, but also allowed for more transparency into the operational dynamics of Bitcoin mining for things like location, production, strategy, and energy mix. Lastly, another major catalyst has been the supply chain constraints coupled with energy macro trends. The combination of supply chain constraints, rising energy prices, and lower Bitcoin prices have impacted miners' short-term ability to grow and scale their operations. This leads me to the most important question. How do we, as a financing company, evaluate miners? Public miners have historically been viewed as a simple way to get spot Bitcoin price exposure in an equity portfolio. What fails to be taken into account is the various value propositions of the strategies that miners take to generate Bitcoin at the lowest possible cost of production. Irrespective to how investors evaluate mining, we think the most important question is this: what is your business now, and what is its downside protection? Miners have been presenting certain data points to help answer these questions, but have we as an industry done a good job of explaining the value proposition of these individual strategies? The first commonly shared metric is Bitcoin production. But there currently isn't an industry standard here on cadence, whether it be daily, monthly, or quarterly, and whether or not the Bitcoin production is inclusive or exclusive of Bitcoin equivalents or not. The second is the cost to mine, which could be a very useful metric. But since there is no industry standard on how to calculate this cost, you're often comparing apples and oranges. In our view, it would make sense to provide a reconciliation of your break-even marginal cost of production by using line items from the income statement on quarterly financials, inclusive of all cash-based expenses such as SG&A, interest expense, and energy cost. Lastly, future hash rate projections, which is an unreliable metric for the valuation of a mining company, as it's not adjusted for the probability of execution or discounted for potential changes in mining fundamentals. It's great to say that you will be the largest miner in North America. It's a different ability to execute on that. There also lacks an industry standard on how to explain a shift or impact in the strategy. So metrics for miners shouldn't be a marketing play, but that's exactly what we've seen over the last 18 months. Standardized metrics should be used to determine the long-term health of a mining operation. So why do we think that miners have chosen these metrics? Well, it's because mining is a capital-intensive commodity business that requires an ongoing need for capital in order to scale. For much of 2021, miners were rewarded in the market for future hash rate, which meant it became advantageous to announce future purchase orders of machines and future growth plans as opposed to highlighting the state of current operations. Like we have the concept of time value of money, there's a similar concept in mining, which is the time value of hash rate. It's very difficult to predict the profitability of hash rate into the future due to the volatility of Bitcoin price. But given the dynamics of mining, we can reasonably assert that a terahash today is worth more than a terahash tomorrow, especially in Bitcoin terms. Looking back in 2021, according to press releases of public and private miners, a total of $3.9 billion was raised in equity and $2.3 billion in debt. However, these valuations were never coupled with an income stream or hedge of future income potential. Miners got overly aggressive on easy money that was available. It wasn't just miners. Easy money was pervasive in our economy over the past few years. We saw things like unprofitable tech, unattainable business models, lofty valuations, and lots of mania in the capital markets as everyone was on the hunt for yield. Money was cheaper than it has ever been. That affected everything, including the mining industry. And a mining company's strategy didn't matter because money was easy to come by. Strategy didn't matter as much to some financiers as well, but it did to us, and it still does. We are still very bullish, on financing miners, and we are your partners in the good times and the bad. And miners were smart to take the capital while they could. For Galaxy, our focus is on how we underwrite regardless of bull or bear markets. In 2022, we are seeing a massive shift in the capital markets. Previously interested lenders have pulled back from the capital-intensive business. Driving this are macro trends in Bitcoin mining and more broadly global economic trends. Mining becomes less attractive in a bear market to investors and financiers, even though it is the perfect time to double down and focus on building and investing in the companies that have the right strategies. In comparison to 2021, we are more than halfway through the year, and miners have raised $261 million in equity and only $705 million in debt. Unfortunately, this shift has affected miners' ability to scale their operations and hodl. But there's good news. There are still several lenders willing and able to finance miners. Noteworthy counterparties include companies like Galaxy, AntAlpha, NYDIG, and Foundry. For us, in order to participate in financing miners, we believe we have to understand how to value hash rate, ASICs, the broader macro trends that can affect mining, and we have to have a good framework to understand the impacts to valuation from changes in hash price. This allows us to assess a miner's health today and its potential health into the future. We believe the focus should be on current hash rate. We believe the focus should be on current hash rate and past performance of operational excellence and on teams that understand the nuances of the industry. But to lend, we have to consider the future. But most importantly, we believe that treasury management strategies will be one of the most important survival tactics during this bear market, and an important consideration for the general health of miners. Therefore, not all treasury management strategies will be the same for miners. There is no one-size-fits-all approach to this. First, let's start with what has been popular. There are standard capital raising opportunities that we have seen miners engage in. The first being ASIC-backed loans using ASICs as collateral. This has been a very common and preferred way of getting funding for lots of miners, and there are a wide variety of groups willing to lend against ASICs. The second being Bitcoin-backed loans, which has allowed miners to use their Bitcoin reserves to their advantage. Some of the challenges, however, have been dealing with margin calls in respect to Bitcoin price volatility, as well as finding ways to set the proper loan-to-value ratio to make sure that the miner can still be in a good position. Lending against infrastructure has also been an interesting opportunity, although difficult to obtain financing for. And then other approaches include lines of credit, raising equity, and corporate bonds. But one strategy that miners have in aggregate shied away from one of the strategies miners have shied away from is hedging. And for the past year and a half, we have been talking to miners about hedging with little desire for miners to actually execute. When the market shifted downwards, we saw public miners selling Bitcoin in record amounts at possibly the worst possible time. Imagine for a second that you have the choice to sell Bitcoin at 60K or 20K. Seems easy in hindsight, right? Hedging is an area where our industry can learn from other industries such as the oil and gas industry and the airlines industry. The interesting part about miners is that they have an opportunity to hedge their Bitcoin, network hash rate, and their energy cost. So we have miners selling at 20K in record numbers. We have capital markets tightening, and we have a wide gap for miners to hit their future hash rate targets. A way for miners to differentiate themselves from other competitors is by reducing the volatility of their input cost and their output value. Comprehensive risk management should be rewarded, both from lenders and investors and general capital market participants. One of the best ways for lenders like us to get comfortable with the metrics that miners love, which is future performance, is through a thoughtful treasury management strategy that allows miners to achieve their capital needs, survive during the bear markets, and take advantage of the upside during the bull markets. But just like all miners are not the same, all lenders are also not the same. We at Galaxy are a principal risk taker and have survived through multiple market cycles. It's extremely important as a miner to find a capital provider that understands the dynamics of Bitcoin mining and can create proper risk management parameters to help miners be successful in the long run. So we talked a little bit about the catalysts that have shaped the mining industry, current trends in capital markets, and mining, and the different treasury management approaches miners can consider to protect their downside. In summary, Bitcoin is here to stay, Bitcoin mining is here to stay, regardless of whether the capital markets are closed off or available to miners. We are seeing the smart miners really focus on risk management through the bull market and the bear markets, and we anticipate that the smart miners will continue to do so. In this time where capital markets continue to be tight, and we don't know when they'll open back up, as an underwriter, we must always think about the downside. Miners that get really smart on balance sheet management will be the successful ones, and we at Galaxy are here to help. Thank you.
Thank you, Brandon, for that great speech. I think all of us in this room believe in Bitcoin, but to go along with your belief, sometimes you have to think strategy as well. So if you're going to be in this business for the long haul, I think that what Brandon talked about is really important, finding the strategies that work for you and finding partners that are also looking at good strategy. Coming up next, we're going to have if you're a miner, one day you're going to be looking for a mining pool. So this is a special treat. We had the CEO of AntAlpha with us today, Leon. Leon, come up on stage. Everyone give him a big hand of applause.
Good afternoon. Thank you. I'm Leon Liu, the CEO of AntAlpha. I'm honored to be with you today at the World Digital Mining Summit 2022. My topic is win-win mining in a strong POW ecosystem. First, let me tell you something about AntAlpha. As a leading cryptocurrencies mining pool, AntAlpha has been committed to providing users with high-quality multi-currencies mining servers since its establishment in 2014. Currently, we can support more than 10 currencies and allow users to easily earn profits every day on our platform. To support clients who are mining at AntAlpha, we provide multi-payment methods. Worldwide stable network, real-time data report, and analysis for higher yield of profits to create a better user experiences. Oh, sorry, I let it quickly. To create a better user experiences, we also innovate some creative servers, such as Code Block. Where the clients can leave a message for their beloved or friends on the blockchain, and another service called hash rate transfer allows users to transfer hash rate from one account to another in a very precise value to optimize their benefits. The main reason we are always confident to promise the premier service to our clients is that we have a stable network connecting worldwide mining nodes. Our headquarters is in Singapore, and from there we connect around 22 countries across 5 continents. The United States is going to be our next major market to expand our community and to keep up with the cutting-edge trends of the blockchain industry. It's never easy. We know it, but only when we shoot for the moon. We are at least land among the stars. Not to mention, we are heading to the moon at first speed. With that being said, I sincerely invite you today to join our journey to the moon. We are open to all discussions and collaborations to achieve big. What you will get is a layer partner and an LT team with creative solution and safe products, because we value your success as we do to ourselves. We can help you to build your own security and sustainable mining pool with support from worldwide service nodes. Lowest lucky risks, minimize mining costs, 24/7 professional tech support, and all digital currencies operation. Last but not least, we can help the clients to build their own mining pools and provide technical support to build up their own business brand. While we explored our way in North America, we collaboration with some esteemed mining farms to co-fund mining pools. At the same time, we are committed to conducting the business in compliance with regulations and the highest standard of ethics. We will take advantage of our partnership with BITMAIN, AntAlpha, BitFufu, to integrate mining pools, mined machine, data center, finance, and computing power to provide more convenient service to our clients. For example, we will partner with AntAlpha so that we are able to launch the electricity line together to provide clients a one-stop solution for both computing power and financial support. In addition to our basic product related to mining pools, we are also committed to create a stronger POW ecosystem. We viewed that POW connects the physical world and the virtual world, and improves the technology and the level of human energy utilization, and that is promotes the progress and the development of human civilization. We have set aside a fund to invest and incorporate high-quality POW projects, as we hope to attract more talents to build up the POW infrastructure. We support ETH and POW-based chains to expand the decentralized application market, and to promote research and develop green energy and renewable energy for sustainable mining industry. We also co-develop some POW projects to expand the ecosystem and to host more applications. We do all of this because we want to make POW great again. To achieve this goal, we have been making a lot of efforts. The first step we took was to collaboration with the Litecoin Foundation. We jointly created the LTC Labs on April 5, 2022. And AntAlpha donates 50% of its revenue to the LTC Labs every month, aiming to make LTC Labs one of the best digital currencies research institute. Also, we sponsored the Litecoin Summit 2022, which will be open in October in Las Vegas. Besides, we issued the paycheck for LTC team developers to appreciate their contribution. Another POW collaboration project we feel very proud of is that we are working with Ethereum Classical to build a stronger ecosystem on ETC. AntAlpha has deposited $10 million in the Mature Fund. The fund will be used to support ETC developers to develop ETC mainnet and to increase layer 2 scalability of ETC through premier scaling solutions. We also will keep looking for and incubate promising projects on ETC. In addition, to increase the utility of cryptocurrencies, we will launch our POW online store. Well, you can buy Ant miners, blue chip NFTs, and enterprise souvenirs using multi-currencies payment. Please feel free to contact us through our website, email, or Twitter. Also, I'd like to introduce you to my colleagues, Lilian Li and Lily Wang. If you are interested in any form of collaboration, they are the best people you can reach out to. Let's work together to create a more decentralized and valuable POW network. Thank you for your listening. Hope you're enjoying your time in beautiful Miami. Thank you.
Okay, so that's exciting. Leon shared a lot of information with us. So now we know that it's not just the mining pool, but mining pool infrastructure is available if you want to reach out. And also, I think with mining pools in general, it's really important to know the people that you're working with. So having a chance to meet the Ant Pool team is a good opportunity. So as Leon said, Lily, why don't you stand up and say hi to everybody? Hi, Lily. Okay. So if anybody's interested in learning more about Ant Pool, you can find Lily. She's really nice. And let's get ready for our next speaker. So coming up next is one of our sponsors and exhibitors here at WDMS. If you have a chance, check out their booth. It's JSBIT. Alan Martinez, Alan Gallo Martinez, the regional sales manager for JSBIT. Alan, come on up.
Thank you so much, Chris. Thank you so much, using my full government name. Welcome. It's truly a pleasure to be here. Thank you, BITMAIN. Thank you all. It's a pleasure because I get to speak to all of you. More importantly, I get to learn from each and every one of you. It's been happening already. Today, we're going to talk about the bear market opportunity and everything that we can have and use during this time frame. My name is Alan. I'm the regional sales manager for JSBIT. And welcome to Miami. I do have a question, and I'm a little bit curious. Who here is from Miami? I see. Okay. Awesome. First time here? Love it, first and foremost. They told me that Miami wants to become the crypto capital of the world. Is that true? Yeah? Okay. Let's see. Okay. Perfect. Well, it surely won't be my last time here. We are coming down from a great time frame, which was 2021. It was impeccable for many of us. We got to witness crypto's explosive growth on the world stage, and its adoption worldwide was insane. And we got to talk about the elephant in the room, though, or in this case, the bear. 2022, without really putting it lightly, has been difficult for some. Depending on when you got in, when you started, you can either be in a great time or having some difficulty. But we at JSBIT have been doing everything in our power to take advantage of this bear market. We've been doing things like crafting critical partnerships with people like yourselves. I've gotten to speak to some of you, and it's truly a pleasure. We've been avoiding the fear that comes with the negative news cycles that we see on a daily basis. The uncertainty that comes with times like these are difficult for many, and the doubt that we all have is very personal because it happens right here. So we're talking about FUD, and a lot of you know about it, a lot of you hear about it, depending on where you get your information from, but our main goal is to really focus on the opportunity, the patterns, more importantly, take advantage of these times. So, without sounding a little too preachy, I want to move on to some data, some good information. We're focusing right now on an S19 Pro 110 terahash. Back in 2021, it was offered for $136 per terahash. I do apologize for some of you that paid that high. But today, 1 year later, we're witnessing that exact same miner going for $38 per terahash. That's more than a 1/3 drop in price in 1 year's time. Many of you see disappointment, but we see opportunity. We're taking a look at this graph here, started in 2018, which focuses on the Bitcoin average mining cost. That's in the blue. The yellow is Bitcoin's price since 2018. We focus one key pattern here, which is the longer you stay during the bear markets, adapt, expand, grow, the faster you'll really be able to take advantage during the bull markets. Pretty simple to understand, but tough to go through when you're in it. So my question is, the current crypto miner price really on a dip? And looking around, seeing some faces, some no's, some yes. Well, the answer is, well, it depends. It depends truly on how you're feeling, when you got in, how you took advantage of the bull markets. Did you take profits? Did you get greedy? Did you think it was going 100K? Well, for some of us, it could still happen, and it will. So that's the real question, is how you set yourself up. We've been following a gentleman by Plan B. If he's on the stage, hello. If he's not, welcome. What we know is that we've been following a 200 weekly moving average. For those, put it simply, it's the average for Bitcoin as to where it should be, not compare what it is. And to put that into a simpler graph, we have this. We're going to focus on the black line. That's the 200 weekly moving average. The blue dots there, the darker they get, the closer they get to that 200 weekly moving average. We've seen that it's happened twice before. It happened in 2014, and it happened again in 2018. So it's happened before, so what now? What exactly can we do? Well, let's look back at the history. And I do apologize for some of you if I bring back some PTSD. I know, actually questioned, how many of you here have been in crypto since 2014, 15? Seeing if anybody. Okay, I see an OG over there. Cool, cool. Awesome. Well, please bring me onto your yacht later, my friend, because I'm excited. Bitcoin has a pretty short history when it comes to this. We're going to focus on one of the most toughest times for Bitcoin, 2014 and 15. At that point, I had only heard whispers, sayings, thoughts. But at this time frame, it was really tough for it. We got to see its rise from 900 to its fall back down to 2. For those who stuck to it, saw some great opportunity. But for me, I didn't really see it just yet. It wasn't until 2018 and 2019. I can remember it like it was just yesterday. One of my professors, he showed a graph similar to this, obviously not so complete, and he showed it to all of us, and he says, you guys know what this is? No one had a clue. There was one gentleman that did. His name was Robert. That's the Bitcoin shark. And then the professor said, oh, you dabble with funny money? That was the dumbest thing I ever heard in my life, but Robert stuck up to it. He said, no, that's going to be something. I'm mining it as we speak. And everybody laughed at the poor guy because they thought he was literally mining for Bitcoin. And then that really made me want to understand it more. So Robert, if you're out there, thank you. And I hope I can get on your yacht too. Because he did stick through it. And it took me literally 2 years to understand the concept of what Bitcoin was, what this whole industry was. And that's what I'm trying to show you guys here. That a lot of us just hear of it, but it only comes up to us when the negativity is there. For me, I jumped in 2020. I saw my first real dip, and I felt it in my wallet. It was one of the most painful things to see because I had just talked to my parents about it during Thanksgiving. And I told them to invest. It was the first time a bear market really hit, when I actually felt it. That brings us to today, the current crypto winter. I was actually at the Miners Summit a few weeks ago. I actually recall seeing a few of you there. And a gentleman by the name of Chad Harris, he said something impeccable, crazy. He said, I love me a $20,000 Bitcoin. And I had to really think about it because I came in when Bitcoin was at a couple thousand, but thinking about it, depending on when you got in, how you got in, and the profits that you take, you should be very happy for a $20,000 Bitcoin. Gives you time, gives all of us time to really use it. We're going to be taking a look at the spent price ratio. Now, we're not going to talk too much about it, but we are going to look at one key thing. The last bear market, which was in 2018, lasted 174 days. The one before it, in 2014, lasted 308 days. Either they're getting shorter, or we're in for some time to wait. The crucial part is to take advantage and look back at the times, because it's truly going to pay off for many. We're going to make a bold prediction today, but I heard it yesterday. I heard it at the BITMAIN event last night. Someone said, we see Bitcoin going to $200,000. That's the prediction we're making as well. We believe in the next 200 days, Bitcoin could reach $200,000. That's why we think it's so crucial for you to start or expand your mining farm. Some of you have been doing great work. Many of you are still looking to expand or maybe even start. We all got into this industry for a plethora of reasons. Some of us for the technology, some of us, well, for the money. But of course, Satoshi came up with an idea, one that still hasn't changed, and the price of the coin shouldn't change it either. Because we are all still so early. We still have so much opportunity. And those that are miners understand that there's 100 years, 2143 to be exact. So we're still early. And the more we focus on the history, we can really see what happens in the future. And my question now is, what are some issues that some of you have been having while buying or looking for miner hardware providers? And as I spoke to some of you, you gave me those answers. And it just so happened that we have them in the slides as well. We've noticed that there's been a big issue with scams and bad actors. Having to go on LinkedIn, Craigslist, Twitter, having to meet Dogecoin Lover 117, who still is a miner from 2 years ago. I digress, but it's an issue that we see daily. Repairing miners, being able to purchase the miners that are taken care of. That's the issue. How do we trust those who have been using it when they're selling it at the price, right? The reselling of used miners, where either you're upgrading to a new miner, need some different change, or you still owe your third wife's alimony. We're there to help. And also the logistics. There's a 3 to 4 month wait for a lot of you, because it's coming from a different country. You have to pay all these tariffs. And that's a big issue that we've seen. But don't worry, JSBIT is here. But why exactly JSBIT? What can this guy up here do for you? Well, I'm glad you asked. We're a trusted U.S. support team, here to assist with anything you may need, who love this industry, who understand the industry. You can have any and every conversation that you may want. We're a supplier of brand new miners. We are dedicated to the manufacturers who give us and sell us the products to make sure that you get the best equipment possible. We're a reliable and professional global logistics team that can get you your product within a week. We're based here in California, actually. And we're a global sales service, so no matter where you find yourself, you can get contacted or connected to us. We'd love to talk. And we actually have a repair and test center here in the US. We talked about it a little bit. But for us, having to sell the miners is one problem. Having to buy is one problem, but selling is another. Having to trust someone who will actually go through with it. Having someone that can actually repair used miners for us is a big deal. That's why we provide that. We have professionals that repair our used miners to make sure you have the best quality product. But there's one more question. What should we do during this crypto winter? A lot of us have different plans. Some of us plan for this exact thing. Some of us are taking advantage. And I'll take a quote from Rob Howarth. He stated, "Keep in mind that we're likely to experience market ups and downs. Regardless, and over time, markets have shown an ability to recover." So, we're all getting older. In fact, with crypto, 2 weeks can feel like 2 years. 20% can fall in the same day or rise that same day. But we're all here for it. We're here for it for that main reason, because it's exciting, it's different. So as we continue to innovate and adapt to everything that comes our way and taking advantage of the market ups and being prepared for the markets down will mean the difference. So let's partner together. Let's make something here. Let's get the opportunity to work together towards something different. Let's push through yet another bear market. And how can JSBIT help you reach your financial goal and make it through the next bull market when it comes by? So thank you so much. Follow us on WhatsApp and Telegram. It was truly an honor to speak to all of you. Hope to see you guys later. Thank you.
Alan, thank you. That was a great speech. A lot of people will tell us winter is coming, but not everybody tells us when the winter will end. So having insight on that is very valuable. And working with professional partners is also great. So if anybody wants to connect with JSBIT, they have a booth outside, and it's a good time to get in contact with someone that can help. I want to mention really quick, if you have any friends that are outside, it's time to start telling them to come in and be here in the room with us. We're going to be having another lucky draw coming up after 2 more speeches. We're going to be giving away a lot more prizes, and it would be great to have everybody here. But if you are a winner, please do check in with the front desk or with our team. If you don't check in by the end of today, I cannot promise that you will receive your lucky draw prizes. So, just check in. Our next speaker is one of North America's greatest Bitcoin mines. It is an amazing location, and they are a valued partner of BITMAIN. It is my pleasure to introduce Ruslan Zinurov, with the CEO of Merkle Standard. Ruslan, come up. Everyone give him a big hand up.
Good afternoon. Alan, I love the optimism. Put it on my calendar 200 days from now. It's my retirement strategy. My name is Ruslan Zinurov, and I'm the CEO and co-founder of Merkle Standard. Merkle Standard is one of the largest Bitcoin mines on the west coast of the United States. So as soon as these slides are ready, I'm ready to go. By the way, I see a lot of Hydra squared hats in the room. That's our internal initiative, hydropower meeting hydro technology. So I'm excited to talk about the newest generation equipment from BITMAIN, the hydro technology that we're launching at scale at our data center in the state of Washington. Perfect, thank you. Okay, so my name is Ruslan Zinurov. It's a great pleasure to be here. I'm the co-founder and CEO of Merkle Standard. First and foremost, I would like to thank the BITMAIN team for setting up this event. I would like to specifically thank Mr. Zhou, Dr. Du, Ms. Zhao, Irene, Xander, Simon, and the rest of the BITMAIN team for making our journey possible. As a part of the personal introduction, I've spent most of my career as a banker on Wall Street, and where I helped technology companies raise capital as well as advise them on strategic M&A transactions. And as a matter of fact, I got exposure to Bitcoin mining first through some of my semiconductor and foundry clients who were providing services to some of the Bitcoin miners in mid-2010s. But things have changed. So Bitcoin took over my life, Bitcoin took over my family life, and we're now solely focused on digital asset mining. Today I'm going to walk you through our experience in deploying newest generation equipment from BITMAIN, the hydro technology, at our site in the state of Washington. Quick introduction of Merkle Standard. Merkle Standard is a vertically integrated miner. We operate about 150 megawatts of installed data center capacity across multiple sites in North America. We currently operate about 2.5 exahash of self-mining hash rate, and we have ambitious plans to expand our operations both organically and through acquisitions. And our goal is to become one of the largest Bitcoin mining platforms globally. Our team has decades of operating experience. We have team members joining us from scaled data center operators like AWS, as well as some of the largest cryptocurrency mining companies in the US and globally. Another thing that makes us unique is our very special relationship with BITMAIN. We have established a joint venture with BITMAIN to develop up to 500 megawatts of data center capacity in the United States, and this strategic relationship carries a lot of benefits, and where we are able to deploy data centers a lot faster and a larger scale in a short period of time. We're also one of the first clients in the U.S. to launch the hydro technology for BITMAIN. Now, let me provide a quick overview of our data centers and operations. Our flagship is the 225 megawatt site in the state of Washington. We specifically picked Pacific Northwest for multiple reasons. First, this region has abundance of hydropower, and it features some of the lowest energy costs in the nation. Today, we have developed about 100 megawatts of data center capacity. This data center can support up to 3.5 exahash of mining operations, and our current fleet includes a combination of S19J Pros, S19 XPs, as well as about 25 megawatts of S19 Pro Plus hydros. Our second site is a beautiful site in the state of South Carolina. This is a 40 megawatt site today. It supports about 1.5 exahash of mining. We also have plans to develop this to beyond 40 megawatts to about 80 megawatts in a short period of time. And in total, this site should support about 3 exahash of installed mining operations. One interesting thing about this site is that with the help of our local development partner, we were able to build this site from start to finish in less than 3 months, which is an amazing accomplishment for the team. And this site is also primarily powered by nuclear power, which is very important to us to have a minimal carbon footprint with our operations. Now, let me talk about Merkle vision. And Merkle vision is relatively simple. We want to be the most efficient miner out there. If you take average efficiency of our current fleet today, it's about 26 joules per terahash, which in our view is one of the most efficient metrics out there. And it compares very well against the large-scaled peer group. And we're going to continue deploying hydropower, and the name for the initiative that we have internally, it's called Hydro Squared. And Hydro Squared means the hydropower, meaning hydro technology from BITMAIN. Race to efficiency. The ASIC manufacturers, the ASIC mining manufacturers, have done a phenomenal job over the last 10 years to really improve efficiency and power consumption of machines. If you look at the S1 machine, believe it or not, it used to consume about 2 kilowatts of power for every terahash of hash rate. And if you look at the latest generation equipment from BITMAIN, the S19 XP Hydro, this machine consumes only 21 joules per terahash. So this is a 100x improvement in efficiency in less than 10 years. This is remarkable. And if you look at the ASIC manufacturer's ability to deploy the leading technology roadmap in terms of nanometers for chips, the blue box here represents the 5 nanometer chip. Now, let me talk about the latest product for BITMAIN, the S19 XP Hydro, and why we got so excited when this product hit the market recently. As you know, we are one of the largest deployers of hydro technology for BITMAIN in the United States with 25 megawatts. And this experience gave us an opportunity to learn quite a bit about this technology firsthand. And our key findings were that this is by far the most efficient chip out there. Right, at 21 joules per terahash, this is about 30% more efficient than the latest generation J Pro. The other insight was that if you look at the bottom chart here, the hydro technology carries a remarkably high uptime. If you look at the blue line, as you can see, the uptime for hydro is close to 100%, regardless of ambient temperatures outside. which again provides more visibility into our revenue and improves our operating and financial profile greatly. The other interesting thing about this solution that it's plug and play. So you don't need to have a lot of engineering on the ground in order to deploy this. This solution comes in two pieces. So the first piece is the so-called end space, which is the container with the miners, as you can see on this picture here. And the other piece that is not here is the cooling tower. So it's only two pieces that that are supplied together. And finally, in our view, hydro technology will have the most extensive longevity of equipment, given that it's operating in a more stable environment and in a much cleaner environment versus air-cooled. Let's talk about profitability of mining and why efficiency is so important. If we were to take current network hash rate, about 200 exahash, and a 7 cent hosting cost, power cost, we're looking at about 7,000 cost to mine 1 BTC today, which is over 50% contribution margin to the P&L at $20,000 price. And even when the network hash rate increases or doubles, we're still seeing some of the best costs to mine 1 BTC. And in our view, this is one of the most efficient machines to help us go through the network increases as well as the upcoming halving here in less than 2 years. Another interesting thing about hydro technology is that you can actually pack a lot more hash rate into the data center. So there's two components to that. The first component is, as you can see on this picture here, you can put about 50 petahash of hash rate into one 20-feet container for Hydro XP. And this compares to roughly 25 to 30 petahash for a conventional air-cooled 20-feet container. In addition to that, what we found is that you can stack the containers a lot closer to each other in the data center. So this greatly reduces the footprint of the data center and therefore reduces your cost. So in our estimates, the density of hash rate for hydro-cooled technology is about 4x versus what it is for conventional air-cooled containers. Now let me summarize kind of the key findings here as we think about halving, as we think about network hash rate growth. And as we all know, the mining business model is highly sensitive to the power cost, and it's highly sensitive to efficiency of your machine. And in our view, the hydro technology is the way for all of us to go through the growth in the network, go through the 2024 upcoming halving, and enjoy some of the highest uptimes and stability and reliability of the hash rate. We're super bullish on this technology. We plan to be one of the largest deployers of hydro tech for BITMAIN in the US and in North America broadly. And we're super excited to have this opportunity to work with BITMAIN and become the BITMAIN's largest partner in the US. Thank you so much.
Wow. I think it's safe to say that Ruslan did an amazing job presenting the S19 Hydro, better than I would do myself. I really liked the opening video. It was amazing. So actually, if you weren't showing your PPT somewhere else, I might want to use it. But it's awesome. So Merkle Standard is an incredibly professional miner. If you guys have any questions about hydro mining, they could be someone to talk to. So thank you. Our next speaker is Simon Wang, a sales director for BITMAIN. Simon, are you here? Okay. Let's all give Simon a big round of applause.
Wow. First, thanks, Ruslan. Thank you for your amazing presentation, which cut my presentation like half. Thank you. Hello, everyone, and welcome to WDMS 2022. Once again, we are gathered here for the belief and the passion in the most promising industry, Bitcoin mining. As technology advanced, ASIC miners are becoming bigger and bigger in hash rate. Meanwhile, ASIC chips becoming smaller and smaller, from 55 nanometers in our initial S1 series since 2013 to our most advanced S19 XP, which use 5 nanometers chips right now. Cooling becoming harder and harder at this moment. How to make hashing products and keep efficient and stable became a very important topic. In BITMAIN, we believe that hydro is the best way to do cooling, and it is the ultimate solution in the future of mining. Within the scope of hydro, BITMAIN wants to fulfill the needs of all of our customers. In the result of years of R&D and testing, we launched a variety of products that applies to hydro ecology. I believe everyone here is already familiar with our key hydro products, the S19 series, hydro series, which includes S19 hydro, hashing at 158 terahash per miner, S19 Pro Plus hydro, 198 terahash, S19 XP hydro, 255 terahash, and much more. After customers secured most powerful and efficient miners to faster track them in setting up hydro mining farms, we are offering Xmei series to simplify and lower the cost of infrastructure. Alongside with our journey, the Xmei keeps evolving. We launched Xmei HK3 version 1 in 2021. Now, our flagship product is the 1 megawatt capacity with 210 slots, and Xmei HK3 version 5 and version 6. We're working on attached 40-fit version HK5, which will be released in 2023, and HK7, which provides 1.5 megawatt to 2 megawatt capacity, along with 210 slots. All these products come with North American and EU certificates. So, how does the cooling system look like, and what kind of cooling solutions do we have? We understand that when we are establishing a mining farm, we might face different kinds of environment all over the world. Here are three ways to do cooling in different scenarios. The most common way is to use our cooling tower. Just simply hook up the cooling tower with our water supply. The sprinklers will make sure that anywhere between negative 25 Celsius to 40 Celsius, a promising hashing mining facility. In the mining farm, which has natural water resources nearby, such as river, lake, or by the sea, our plate exchange system will provide cooling without any water be wasted at $0 for water usage. If there's not enough water resources around the mining farms, or water quality is not good enough, customers can still use our dry cooler to make sure that the mining farms is running constantly. Now that we have fully understand the products, other than the financial benefits you already learned today from the earlier speakers by my coworkers Irene and SQ and our dear customer Merkle Standard. Thank you, Rosa. I do want to press the topic of environment effectiveness as part of the financial benefit. We've all noticed that a huge heat wave sweeps all the way from North America to Asia and to Europe. 2 days ago, I was in New York. The ground temperature was like 35 degrees centigrade during the day, even hotter than here in Miami. Unfortunately, most of the mining farms are sensitive to such a dramatic temperature change. This situation does affect air cooling mining farms. Let's use Georgia as an example, since in US, 39% of the power consumption for mining are coming from the state of Georgia. When extreme hot weather comes, like now, the cost effectiveness goes down by 10%, which costs like $5,040 per month per megawatt. But in the meantime, let's see the cost of hydro solutions. Sorry. Farms that are using cooling towers, the cost of water is $975 per month per megawatt, which equals to about 19.3 compared with extra cost of the air cooling. And farms are using plate exchange, the cost of water is obviously $0 per month per megawatt. And the dry cooler system cannot supply 40-degree centigrade weather condition, but when the environment temperature is about 5 degrees centigrade, the cost per megawatt per month is around $756. And here's the beauty of hydro, stability. As the founder of BITMAIN, Mr. Merkle, once said, in hydro system, all chips in every season, all over the world, all works at the same temperature range. As you can see here, the straight line, which is right here, shows the stability of hydro solution. And the fluctuating line, which represents the not very stable as cooling solution from air cooling solution. That's because due to the unevenly temperature between chips and hashboard. So in the actual operation of mining facilities, there are many more other benefits. The first is noise is greatly reduced, and the overall noise of container is reduced to below 60 decibel, and we are aiming at 40 decibel for the next generation. Secondly, the energy efficiency is improved by 5 to 10%. And third, much less dust issue, which leads to much longer lifetime of equipments. And last but not least, the use of automatic control system that gives full control over the whole system. This is something I want to highlight. In order to help mining farms to conduct collective control, which minimum labor cost, or N-Space is equipped with a multifunctional, automated, integrated central control system. Through the central control system, the least amount of manpower can control multiple hydro systems in a very large spread out area. For example, in Wyoming, some customers, they applied Bitcoin mining in a very decentralized gas field nearby isolated gas wells. In this type of locations, instead of having someone drive like 15 minutes from one well to another and maintain each identical end spaces, he or she can easily use the online central control system to conduct one-click turn on and shut down of the entire facility, or check water pressure, water replenishment, which miners' hashing situation, and much more. As always, BITMAIN put R&D and customer experience as its top priority. I wish everyone here could benefit from our hydro solution, and together, we'll walk through this challenging time and walk into the promising future. Thank you.
Simon, thank you very much for the speech. Simon talked about a lot of things that got me very, very excited. It's always interesting to hear about the technical side of BITMAIN products. We don't often share this information in public presentations, but I think that it's a great thing that we're able to share some of it today. And always, if you have any technical questions, you should reach out to our team. We're always happy to help and to get involved. And now, we're getting ready to do our second lucky draw. If you have any friends that are outside, please call them in. Anyone who's not in this room to get the prize will not get a prize. All right, let's do this. Simon, can you stand over here? Yep. Okay. Okay. So to start, we're first going to draw. Well, let's pick a number. Let's go. I want it to be a surprise. Okay. So the winner is 0, 7, 8. How many people are still in the running? Is there anybody? 6. Did you win? No. Is a Janice, is there a Janice in the room? No? No? Okay. All right, we're moving to the next person. Let's pick another one. Janice. Dun 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 dun. Okay. 0, 4, 0. Who's still in the running? Is anybody? Okay. Perfect. 9. Is there an Elias in the room? Elias, come up to the stage, please. Oh, Elias is not here. No, two people. Are you sure? Okay. Okay, let's pick another one. This is anticlimactic lucky draw. Okay, we have the third number coming up. 0, 8, 0. Who else is still here now? Okay, a couple guys. 7. We've got Alexi. Is there Alexi in the? Or no, Lucia? Cryptech Solutions? No. Oh, Lucia. Is that? But what's your number? Is it 0807? Do you work for Cryptech Solutions? Okay, then it's not you. Okay, pick another number. This is very, and since we've drawn so many times, I'm just gonna go ahead and set it. We're giving away two S19 XPs. So hopefully everybody's in the room. So let's see. Okay, 0, 6, 3. Is there anybody still in the running? Okay, 9. Do we have Jim Crawford in the room? Jim Crawford, anybody? No? Oh, come on, guys. No, just take another one. Take 2 this time. Take 2 this time. No. Take take one. Take one. Yeah, let's go. Okay. I'm losing hope here. 0, 5, 9. Okay, I think we got a winner here. 2. Harrison is there a Harrison in the audience? 0592. It is Carbon 0. No? Okay. Simon, this is tough. Now I understand why we need 20 minutes for the lucky draw now. Okay, so let's hope for this one. If you visualize it in your mind, there's a good chance that you can do it. There's power in thoughts. So 0, 5, 4, 8. Do we have a Xiao Zhengli here? No? Okay. Xiao Zhengli. Going once, going twice? No? Okay. All right. Nobody wants the XPs today. Oh, well, okay, so let's try this. 0, 6, 2, 3. Do we have a Bitcoin trend, EL Bitcoin Daily Show? El Bitcoin Daily Show? No? No? Okay. Simon, pick another one. I'm sorry, everybody. It's going to happen. It's going to happen. Wait. Do we have Bitcoin Daily Show? Do we have it? El Bitcoin? No? Okay. All right, it's going again. 0, 5, 2, 4. Do we have a Sure Deeds Everspin PY? Oh, congratulations. Everybody give him a big hand of applause. Okay, and we have a winner. Thank you for showing up. Okay, well, no, and we're gonna draw one more. So we have one more. Yep. So it's okay. You could stay up here, like right there. Yep. Sorry guys, it's exciting finally finding somebody. Okay, 0, 5, 8. Is anybody still in the running? Okay. 8. Is there a Zhang Duo? Nope. This one's not. I'm not gonna let this one win. Okay. Okay. I'm not gonna let that one. Okay. All right. So let's do a 0, 6, 0, 6. Do we have a? Is it a Karen or a Kalen Malcon with bit S, bit 5? No. 0606, no? Okay, let's do another one. Oh man. Okay, it's okay. This makes for good YouTube television. Okay, 0, 5, 3, 2. 0, 5, 3, 2. Come on up. Come. Yeah. Okay. 0, 5, 3, 2. Perfect. Okay. All right. Let's take a picture. Okay, and remember, guys, at the end of the day, talk to our team to make sure that you let us know and you find us after this to make sure that you grab your prizes. Thank you, guys. Okay, we're gonna do 3 more lucky draws. This time we're giving away S19 Pros. So let's get started. Simon, okay, you ready? Okay. So I've got, oh, this person didn't rip their ticket off. There's no way, well, I'm gonna call a name. If you have an ID with this name, we'll consider you the winner. 0473, is there an REETE, BitCore? Is there an RE with BitCore? Ari, are you here? Going once, going twice, no Ari, okay. I was expecting that a little bit. Okay, so no, just give me one at a time because I don't want to go over the. Okay, so 0774. Do we have a Samir? Samir? Okay. Come on up. Simon, can you give me another ticket? Okay. Do we have a 0498? 0498. Intra-house data centers? Nope. No one? Okay. Simon, another ticket. Well, it's good to see how that people are attending. I mean, like, it's at least the tickets are there. So, 0570. 065. Do we have an Eric Tooley? Eric Tooley? You got, okay, Eric, thank you. Okay. Whoa. Be careful. I saw. Okay, but you have. All right, Simon, let's do the final ticket, and with any luck, this person will be here. Okay, so let's see. 0604. Do we have a Tung Sheng Kang with BT Miners? No? BT Miners. 0604. No takers? Okay. One more. Simon, I think this is going to be it. One more. Okay. Do we have a 0437? Elmerton, I'm going to mess this name up. Green Tech. Is there anyone with Green Tech? 0437. No, okay. We gotta go. So Simon, come on, let's pick one more. Okay. So this ticket 0673. The ticket has both sides attached, so I'm gonna call the name. Gary with FPG Capital. Is Gary with FPG Capital here? Okay. Come on up, Gary. Give him a round of applause. But Gary, when this is over, I'm gonna need a CID. Congratulations to our winners. Take your tickets with you. Okay, I am extremely happy that lucky draw has passed. I never imagined that it would be hard to give away S19 XPs, so that is good to know. That being said, our next speaker is from Anchorage Digital, Rosa. Everybody, give up a big hand of applause for Rafa. Rafa coming up.
Sounds good. Thank you. Wow, that was fun. You know, with me, you're not going to get any miners, but I will give you the most important chart in all of crypto in this presentation. We're going to get there. But thank you, BITMAIN, for giving me the opportunity to talk here. I am Rafa Rosa. I am the credit structuring lead at Anchorage Digital. So who is Anchorage? We're a platform for institutions that want to participate in crypto. We started with the most secure custody solution out there. And on top of that, we built a few other things, such as an agency trading desk, and then the financing team, which is where I sit, and a few other things. When it comes to lending, we do crypto-secured lending, and we also do ASIC financing. And to date, I'm happy to report that we've had no liquidity issues and also no losses, either to our clients or to the company. And you got to ask yourself, how does that happen? Bitcoin is a very volatile asset. We all know that. But I always like having this chart here that you see on the left on my desk, because we know Bitcoin has had and continues to have really deep drawdowns. And when it happens there, the same thing happens to all the synthetic Bitcoin assets, including miners, which you can see here on the right. And the question becomes, how do we all here survive such what I call existing conditions? And not only that, if you're a miner, when it comes to attracting favorable capital, you also want usually three things. You want more funding, you want cheaper cost of capital, and you also want longer duration. And at Anchorage, we think there's one answer to kind of getting these things. And it actually goes really well with Simon's presentation when he talks about the hydro miner. He talked about the word stability. I call that volatility reduction. Because it can't be that as a miner, if Bitcoin goes down, your liquidity goes down, your asset base goes down, your cash flow goes down, and also so does your access to capital, right? It puts you in a tough position, and me as a lender, that means I'm also in a tough position. If you look at other people that have single asset kind of commodities, they have something in their DNA that is about volatility reduction. What I have here in this very fancy chart is the Commitment of Traders report. And what it really shows here, the producers are in red. And if you look at these light red bars, it's their short positions on their own commodity. And what you see is that commodity producers are usually net short what they're producing. They're hedging. And if you look in the bottom, you see that they're usually 50% of all the positions out there. In our industry, I think we see a persona miner that I call the scale fast and break things miner. It's a strategy that works quite well, I think, in software engineering, but when you're building physical things, it becomes a little bit more difficult. This is a miner that, as they're growing, they're still in a single location. They're building really fast, and they're sacrificing sometimes what will be uptime or protection of the machines. Their electricity costs are not that hedged. They have a lot of large unpaid contingent obligations. And then on the financial side, which is where I'm going to spend the rest of the time here talking about, they have an unhedged balance sheet and cash flow. They hold large amounts of BTC. And then they want to raise the least amount of equity possible and do a bunch of debt. When it comes to those three things I talked about earlier, not the miner that I'm usually trying to lend to. And then we have the methodical and balanced miner, right? This is someone who, as they grow, they're being geodiversified. Even if the data center takes a little longer to get done, they're making sure it's resilient. Uptime is, a priority, and they're building something that's going to protect the machines. They're hedging their electricity costs for most part. They have little contingent obligations. And then on the financial side, they're hedging their balance sheet and their cash flows. They're acting like those commodity producers that we saw earlier. And then when it comes to liquidity, they're keeping uncorrelated liquidity in their balance sheet. And lastly, they want to get as much equity as possible and do modest leverage. If I could encapsulate what this miner is doing from my perspective, is they're selling upside at the right time so they don't have to sell upside at the wrong time. And what are some things that I see people doing and that I like to see miners do? Like I said, raising lots of equity. Because when you incur debt, your equity volatility increases. Some people buy volatility instruments. And it doesn't even have to be crypto instruments. Because you can go into traditional finance and maybe go into something that's cheaper, more liquid, and use proxy instruments. Maybe you buy MicroStrategy puts instead of a Bitcoin put, and maybe you get a better deal there. And then in terms of insurance, it's really about eliminating catastrophe risk. On the liability side, which is where I've been focused, at Anchorage, we've done a lot of Bitcoin-denominated loans. I got to tell you, when it was at 50K and 45K, a lot of people didn't want to take them because, again, they didn't want to sell the upside. But, right, that's what you need to do when you're at those levels. An alternative strategy that you can also do is an options collar, where you're buying a put and selling a call. You get to a very similar outcome, but you end up usually having to post collateral. And then you have hash rate contracts. These are all things that you can do. It can be a mix. It can be a certain percentage of everything, because that's what protects you to the downside. What I usually see people tell me too is like, hey, what if Bitcoin goes to 100K? I'm going to lose all the upside. And I'm not sure about that because first, hedges, they roll off. So as your hedges roll off, you're going to be able to lock in like economics at higher levels. And then on the equity side, everyone is going to be wanting to give you money. And then on the lending side, I'm going to be calling you, like asking you to take my money as a loan. So Bitcoin at 100K, like everyone here is happy. You're happy, and I'm happy. Now to the liquidity. This is we've heard a lot in the earlier presentations what miners have been doing. We think that miners should be holding liquidity when it comes to that core operational expenses and debt payments in something that's uncorrelated to Bitcoin. I know that this is like maybe a bit different. And specifically, it's about holding that liquidity in assets that are correlated to a strong US dollar cycle. And this is what I promised earlier. This is what I call the single most important chart in all of crypto. And it's not a crypto chart. This is the trade-weighted dollar index. So it's the dollar against a bunch of currencies. And we can go all the way back to 2013 when I was a third-year analyst at JP Morgan. When Bitcoin was at 128 in about June of 2013, that's when the dollar was kind of topping out. And then as it starts, it's kind of in a small downtrend. We get that December 2013 when it goes above 1,000. And then the dollar bottoms. And the Fed is expected to raise rates back then and starts raising rates. And then there's a massive rip. And now we're in March 2015, and guess what? Bitcoin is at $254. Then it's kind of ranging. It's December 2013. It's up 3x, 748. And then coincidentally, the dollar goes into a downtrend. And guess what? That big crypto bull run that everyone started to talk about happens. And then we all knew the bubble was going to pop, right? And then it does. In about December 2017. And look at that, right? 19,000. Guess what's happening at the same time? The dollar's bottoming. And then what we know today as crypto winter, dollar uptrend. And then March 2020, it's the day that all risk assets, and this is the thing about Bitcoin, people talk about inflation hedge, they talk about digital gold. I think Bitcoin is a risk asset, and it's a risk asset that coincides with dollar cycles. And the data, I think, kind of shows that. Because when all risk assets bottom in March 2020, so did Bitcoin at about 3,800. And then we had the big 2021 rally, and now we're at May 2021, 64,000. And things stop going up, and we're all, if we're in the crypto bubble, we're thinking it's, supply side stuff in crypto. We can make up all kinds of narratives. But yet again, coincidentally, as I like to say, the dollar was bottoming. And as it starts going up, Bitcoin did retest the 60s. But if we were all watching this chart, we would know that the odds was that it didn't, stay above. And here we are today. The dollar's at cycle highs, and Bitcoin is at 22,000. The way I look at this is, I look at on-chain data, I look at all the things. If the dollar's not below those March 2020 highs, or at least kind of, trying to trend down, it's just the odds are where it's a bit difficult to see how we get back to those 60,000. So what does that translate, again, back to that liquidity? You want your core liquidity to not be going down the time you need it the most. If anything, you want it to be appreciating. So that's what, I tell some of my clients, hey, maybe you put something in the USDU ETF or something that does well in strong dollar cycles, because that helps keep you safe. Now, in terms of leverage, the question also comes up is like, what's too much leverage? It's a case-by-case scenario because it depends, like, are you hedging any of your cash flows? Are you hedging any of your balance sheet? And the example I have here is just bringing back that chart, right, that stays on my desk. If you're an unhedged miner and you do 30% leverage, and I'm not looking at any specific transaction, I'm just talking about like your asset base and you're taking 30% leverage. If you do that and you're near that top quartile, And, we have those deep drawdowns, which have happened in the past, probably will continue to happen in the future. You go from 30% leverage to 100% leverage. Your cash flow, a bit more limited to kind of servicing debt. And you're like an undesirable borrower profile. It's much more difficult for a lot of people to want to invest. So I think it's about limiting the leverage, and the things that you can do to increase is doing things like a Bitcoin-denominated loan or hedging your balance sheet so you can take that leverage. And the way I think about it is you're able to stabilize, right? Just like how the Hydro machine is doing to your operation. Things, certain pieces of the puzzle that allows you to have a more controlled, increased IRR. So to recap, at Anchorage, we believe in capital preservation. That's kind of how we approach everything. And when we think about the miners and like the things that we want to see people do, it comes down to these three things. It's reducing volatility on everything, everywhere, all at once. Great movie. And that requires selling some upside as things go up. The second thing is really thinking about what do you think Bitcoin is? I think it's a risk asset, and I think it's a risk asset that coincides with the US dollar cycles. If that's the case, try to keep some uncorrelated liquidity. And then third, keep the leverage modest. Thank you.
Thank you, Rafa, for that great speech. I feel like even if I wasn't in the market for lending right at this moment, it would still be cool to have a conversation with some of the lenders out there, because having that perspective and a financial background for Bitcoin is pretty important sometimes. Now we're getting ready. We're getting ready to wrap things up. We're going to have our second panel, POW in 2022. What, why, and how? So we're going to have everybody come out soon. Okay, our host for this panel is the head of marketing at BITMAIN, Xmei Lin. Xmei, are you back there? I hear Xmei somewhere. Oh, okay. Okay, you can. Okay, we're good. We're good to start. Xmei, come up on stage. Everybody, give her a big round of applause. Okay. So, along with Xmei today, we have Lucien Chen, AntPool's CTO. We have Bob Somerville, from the ETC Cooperative. We have Josh Swihart with Electric Coin Co., Zcash. Matthew Durnia with Cadena Mining Club. Steve Kennard with the Texas Blockchain Council. And Dr. Le Xie with Texas University. Okay, guys, we're ready for you. Come up on stage. At least I think everybody's backstage somewhere.
I think I'm the first one. Okay, here.
Okay, here we go. Everybody's coming at once. Everybody give them a big hand of applause.
Just sit. Yeah, that's good. No?
No.
I'll be here. That's fine, no problem. Okay, we missed a very important guest. Bob Somerville, we need you. Where are you? Okay, let's just start first. Hi, everyone. Thanks for attending our World Digital Summit. And I'm Xmei, the head of marketing from BITMAIN. And today I will hold a panel about POW, which is proof of work. I invite some very important guests from the POW ecosystem. They're all experts and have a lot of industry experience and really some very deep insights. And we will talk about some topics about the POW in 2022, what, why, and how. Now stay tuned and let's start. Okay, first, before topics, I want all the guests to introduce yourself. I know you're all very famous, but just tell our audience who you are and what's your job. Okay, first, I think from Lucien.
大家好，我叫 Lucien，我是 AntAlpha 的 CTO。AntAlpha 呢，现在是全球领先的多币种矿池。我们除了就基础矿池业务以外，我们现在也会就是打造一个很强大的一个 POW 生态社区。
Okay, thank you, Lucien. Okay, then Josh. Josh is from Zcash. My friend Josh, tell us about yourself.
Yes, Josh Whitehart. I'm the Senior Vice President at a company called the Electric Coin Company. We invented and support a cryptocurrency called Zcash. Zcash is a privacy-preserving currency. It's been around for a little while, since we launched in 2016.
Okay, thank you, Josh. Then Steve.
Good afternoon, I'm Steve Kennard, Director of Bitcoin Mining Analytics at the Texas Blockchain Council. My work has been focused on business development and engagement with cities. We got the first city in the United States, the city of Fort Worth in Texas, to mine Bitcoin, and so I'm working to develop more relationships with cities and universities and promote proof of work throughout the country.
Okay, thank you, Steve. Okay, then next Matthew.
Hi, good afternoon, everybody. First, let me just thank BITMAIN, May, and all of the sponsors of this event. This has been absolutely spectacular. Thank you very much. My name is Matthew Dernia. I started mining cryptocurrency about 1.5 years ago in my apartment, and I very quickly maxed out the 150 amp breaker in my apartment. It really got to the point where I had to turn the miners off to use a microwave or use any kind of high-powered electronic. But I wasn't quite there where I could really afford to get a facility of my own or buy a bulk order of miners on my own. So through that process, I had an idea to start a company called Cadena Mining Club. And what we're doing is fractionalizing ASICs to give everybody a chance to mine cryptocurrency, no matter where you are in the world, what your electricity rate is, what your income, or what infrastructure limitations you may have. So with all that being said, I'm again really grateful to be here, and thank you for having me.
Thank you. Then Dr. Xie.
Hello, everybody. My name is Liao. I am a professor. I guess I'm the only professor here. Anybody? Any other professor here?
Other professors?
I'm a professor at Texas A&M University, where I am helping to run the energy digitization effort at the Energy Institute. We educate the next generation talents, and we develop innovation that is going to drive the ecosystem for the future. So very pleased to be here. Thank you.
Thank you. Okay, next, let's enter into the first question. What is POW? What is proof of work? Could any of our speakers explain it in a very simple language? I want to ask Steve first for this question.
Sure, I often travel around. I meet with city councils and people that have little to no familiarity with Bitcoin or proof of work at all. And a way I start the conversation off is that proof of work is a piece of data that's difficult to find, but relatively easy to verify. It's the way that a node that validates transactions on a network earns the right to validate those transactions. And I stress that word earn, because at the end of the day, what proof of work provides to the network is assurance that energy was required to earn that right. And energy is a universal value across all cultures and time. And so that's what proof of work delivers, is decentralization and security in a digital age. And it's all based on energy. And usually that helps, I think, to start the conversation off of what the value proposition is that proof of work brings to a distributed ledger. It is the security, and it's really just a piece of data at the end of the day. And often people don't understand or appreciate that.
Okay, thank you, Steve. What do you think about it, Matthew?
Yeah, so to actually prepare for this, I was Googling last night. I wanted to Google, what is proof of work? And if you'll all just bear with me for a moment while I read you the definition that came up first. Proof of work is a form of cryptographic proof in which one party proves to others that a certain amount of a specific computational effort has been expended. Verifiers can subsequently confirm this expenditure with minimal effort on their part. Now, I know a lot of us in here, we're smart, we understand proof of work, we get it, but for the average person, that really doesn't make any sense. So how do we put proof of work into simpler terms that everybody can understand? To do this, I'd like to look back to last year's NFT bull run. Whether you like NFTs or not, it's undeniable that they brought millions of new people into the cryptocurrency space, which is, fantastic. Tens of billions of trading volume, market capitalization, all for something that doesn't provide any value. So why did this happen? I like to think it's because us humans, we're visual learners. Terms like proof of work, cryptocurrency, blockchain, they may be intimidating, right? But a physical representation, a picture, or an NFT of something, it makes sense. A picture's worth 1,000 words. So this right here is an ASIC computer. This is proof of work. These ASICs really exemplify the core aspects of blockchain, of security and decentralization. Anybody can run these in their house, and the more miners that are running, the more secure the network actually is. The ASICs are what separates proof of work from something like proof of stake. I just said ASICs exemplify the core components of blockchain, being security and decentralization. And without the miners, what is the blockchain? What is it? As Darren stated earlier, proof of stake is hundreds and hundreds of years old. It's very old technology. It really allows the stakeholders to have a direct effect on what happens with the protocol. Proof of work is just ran by these computers, and it's a lot harder to damage the network with proof of work, and it's because of these computers. So proof of work, that is really that is what makes blockchain. It really is the core component, and that's why proof of work blockchains like Bitcoin and Cadena, for example, are incredibly powerful in terms of the security and decentralization of the blockchain.
Okay, thank you, Marcel. This one is very cute.
Oh, yeah.
It's so cute.
A little ASIC miner. These are our NFTs, so check us out, the Data Mining Club.
Very interesting. Okay, before the second question, now finally Bob comes. Okay, Bob, please introduce yourself to our audience. I know you are famous, just...
Hey, everybody. Is this working? Yeah. Hey, so I'm Bob Samuel. I'm the Executive Director of the ETC Cooperative, supporting the Ethereum Classic ecosystem. I've been involved in the blockchain ecosystem since sort of 2014, 2015. First on the Ethereum side, Hyperledger as well, Enterprise Ethereum Alliance, and more recently ETC. So yeah, sorry I'm late here. I guess we started a little earlier than planned. So hi.
Okay, thank you. And we all know that AntAlpha CEO has just announced that AntAlpha will invest $10 million to ETC. So congratulations, Bob.
Well, thank you.
Viva
thank you,
ETC.
AntAlpha. Yeah, okay. I mean, I think we're sort of entering a really quite sort of exciting phase where with the merge imminent on Ethereum, you've actually got a real differentiation there between Ethereum and Ethereum Classic, which has been more of a philosophical rather than a practical thing. So I think, yeah, we are going into a new phase of proof of work, and it's going to be great to see how that all plans out.
Yes. Okay, thank you. Next questions. We know POW is a fundamental consensus of a blockchain. But there's not only POW, right? We have POS and others. What are speakers think of the dispute between POW and POS? I want to ask this question for Josh. This is a question for you, right? Will it be hard?
Thank you. Yeah, so I'm kind of an interesting person to have up on this panel at this particular conference because so Zcash is in the midst of working through with the community and moving to proof of stake, away from proof of work. And our plan right now within the community is to look at doing that over the course of the next 2 to 3 years. There's a number of reasons that we're looking at doing it. Some of them may be obvious, but maybe some not. I'm actually going to read a list from my phone so I don't forget some of those things. So certainly the climate change, the kind of issues with climate change, and that is a concern for many in the Zcash community. For them, whether it's their personal belief in some case, or whether it's optics, because we work with regulators and folks around the world, and people are worried about that concern, and also with the mainstream. But again, that's like not the only reason. So another one is security. So with proof of work, it's 51% attack and a rollback on the chain. We've seen that happen multiple times. With proof of stake, we have the possibility of something called absolute finality that allows for the security of the network, and then the validators that are responsible for validating ultimately get slashed if they do something bad, if they try to double spend on the network. So that's another one. A huge one that we've talked a lot about was when ASICs came onto the network in, I think it was roughly 2018, Zcash lost 90% of its users around the world because most of the users around the world were using GPUs to mine Zcash, and that was no longer an option for them because the hardware was too expensive. So maybe this fractionalized ASICs kind of thing model might work, but that's a concern. We want more people to be able to participate in holding and using it. The other thing that we saw is we saw a tremendous amount of down pressure in the price. So unfortunately, many of the people that are mining ZEC don't have like a strong allegiance to ZEC. It's used to get to another currency. So a lot of the mining, what we saw with behavior, a lot of the miners that were coming on with ASICs were selling the coin and putting downward pressure on the price of the coin, which is totally disruptive to kind of the broader user experience because we had such high inflation kind of coming out through the first 4 to now 6 years. There's others, interoperability. So with absolute fidelity, I have the ability to do some things cross-chain. So I can take ZEC and move it off of a certain protocol's island, off of the Zcash island, and move it into DeFi applications for other people to be able to use the token. That's a really important one. And then there's other things related to like coin holder voice, which is really important, censorship resistance, and some other benefits. So we're like weighing right now, we're doing a bunch of research, and we're weighing pros and cons of proof of work and proof of stake. Community's having that conversation. There's conversations, do you do a like hybrid kind of solution? Do you need to cut over fully? What does that mean? What are the implications? It's just something we're kind of wrestling with as a community right now.
Okay, thank you, Josh. And we totally understand your concerns. And we understand that only after research we will know POW and POS which one is better. So we support research. Though we believe in POW, that we agree that only after research you will find out that which one is better. And also in the future, we will do some give back activities to the Zcash community. And so thank you, Josh, anyway. Okay, then next, Steve, what do you think about it?
Sure. We as the Texas Blockchain Council, we support innovations across the broader digital asset space. And so I don't take an anti-proof of stake position, but rather I think it's important to draw the distinction and go back to how do validators of transactions earn that right. And so what I mentioned earlier is what makes proof of work so powerful is they earn that right through energy, and that's something that has universal value, indisputable in every human civilization. That to me is what really makes it rise above, is something that delivers decentralization and security in a digital asset. And particularly in the case of Bitcoin, it's what has protected the largest and most liquid of all of the coins. And so I think that will continue to have value. But there are also other ways to validate transactions and support, a decentralized consensus. So I think it's about pros and cons and kind of weighing what the most, what the priorities are of an end user of that network. And the differentiation in proof of work is that energy-based money, and I think that will continue to have a very strong value proposition.
Okay, thank you. No matter Josh or Steve, I think they all agree that POW is important, But why is important, and how does POW truly change blockchain and change our daily life? This is a question for you, Bob.
So, yeah, I mean, I think essentially when Bitcoin was created, proof of work, I think, was one of the sort of the greatest innovations that happened at that point. In that you have something there which is sort of truly disconnected and independent from the other participants that you have in there. That you have this real division of responsibility and power there between the block producers, the coin holders, the users, the developers. You have all of these separate groups, and specifically there with proof of work, you don't have this gating requirement to hold the coins to be able to participate in that consensus. That when you have a proof of stake set up, you have this kind of gating requirement of needing to be within the system to participate in the system, where on proof of work, you really do have this true permissionless on-ramp where anyone with the access to hardware, obviously, but that you can come into the system as a complete outsider and and get your on-ramp that way. In any kind of proof of stake system, you're having to get hold of the coins before you can start it. So that basically makes you subject to all the same kind of real world legal, geopolitical constraints that you have in existing systems. So again, there'd been talk earlier about proof of stake is not a new thing, and that really is the case. Proof of work, I think, is something which is often very undervalued, but I think it was a true and huge innovation at that point, which you haven't really got anything which you can switch in which has the same characteristics. I mean, that's not to say that POW is the only solution for all kinds of systems. I think you've got value propositions all over the spectrum of choices. For a lot of enterprise scenarios, for example, you're probably working within a situation with real-world legal entities and real legal agreements anyway. But that is not the case for permissionless public chains. So I think that you really have something very, very unique with proof of work as an L1 in that scenario. And I mean, I think often people try and put everything into that L1, and sort of think, for example, okay, well, really we want to have, all payment transactions in the whole world on an L1 chain, right? That really maximalist thought of, well, hey, you've got Bitcoin and Bitcoin will do everything for everyone in the world. And obviously that will never work. You have these trade-offs between scalability, decentralization, security. So, L1 chains with that maximal decentralization, will likely not scale, but that's okay too. But I think you have something very, very unique in an L1 proof of work chain, which you really cannot replicate those characteristics in anything else. So I think, that is a really, truly, truly important thing to have.
Thank you, Bob. Thank you so much. That's really deep insights. And Lucy, what do you think about it?
那个就是我认为 POW 之所以有重要的原因因为有2个点，一个点是资产锚定，另外一个点是去中心化。资产锚定我可以来具体解释一下，就是目前其实我们获取数字货币的方式有2种，一种的话就是通过挖矿得来，第2种方式的话就是去交易所购买。所以 POW 的话其实是让一个用户通过法币去购买矿机，进而去挖矿，去获得数字货币最直接的方式。所以 POW 的产生会让更多的人去了解区块链，去加入区块链。所以 POW 的话，本质它其实是连接物理世界和虚拟世界的一个最好的桥梁。当然 ，POW 的价值的锚定的话，它其实也是依据于它背后的这种资产的锚定，就是有多少矿机，那其实的话就可以去锚定出来这个 POW 币种的价值，这是一点。另外一点的话就是，本身 POW 的话是最安全和最去中心化的共识算法，所以用户购买矿机之后的话，其实就可以参与到这种去中心化的这种打包交易的过程里。那基于 POW 的区块链，它的节点数目会很多，所以这其实它也是提供一个很强大的共识基础。对。
Okay, thank you, Lucien. And next question is for Dr. Xie, because Dr. Xie is very professional in the research of energy and Bitcoin mining. So this question is a little sharp. Some people say that POW is not clean, it consumes too much energy. What do you think about it? I think you have some slides to show us, right?
So it's,
this way?
Yeah, go this
yeah.
way. Yeah. I guess it's 4 p.m. Tuesday afternoon. You might want to have a bit of a lecture time. So I prepared a few slides so that I just cannot resist having a bit of a lecture time. So bear with me for 2 minutes. Before I answer your question, I want to first draw your attention to something just happened in the past few weeks. And before that, this is where I am coming from, Energy Institute at Texas A&M, one of the greatest university working on energy problems. And we have Steve is one of our proud alum here, Gigam, Aggies. So we work with a wide range of partners trying to forge the way for energy innovation. So something happened just last few weeks. This is the global hash rate. Again, may not be exact, but you roughly know the idea. Between July 8th and July 13th, there's a noticeable 15% to 20% reduction of global hash rate. What happened? What's going on? And I got a phone call from some, TV from Houston and say, hey, can you talk about the heat wave in Texas and how we might survive the next heat wave? I'm like, oh, something is very hot in Texas. And then global hash rate got reduced by 15%. What's going on here? It is because the electricity consumption, especially when it comes to peak time, is one of the key bottlenecks of the sustainable development of the hash rates in this POW world. And you see some news like this. On that particular Monday, there was about like 18% of reduction of global hash rate. And on that particular day, the claim, again, this is a claim yet to be verified, the claim was about 1 gigawatt of mining demand was shut down in Texas. So I think we are not ready to claim cost causation, but definitely there is a correlation here. The correlation is the very strong correlation between the stressness of the grid and the performance of the hash rate. So what does that suggest us? It suggests us that one needs to look much more closely with each other between the mining world and the energy and power world. And these are just some of the sample activities that we have been doing. you guys are out there making real money. We are having fun writing papers. So, but these are something we actually seriously conducted some research on what exactly does it mean, the POW or the amount of energy consumption on the grid. Is it clean, no clean? What is the demand flexibility when such stress moment happened, right? And in a broader context, as the world is going towards this carbon neutral transition across the economy, electricity and transportation are the top 2 carbon emitters. So if you want to do anything on carbon neutral transition, you need to take care of electricity and mobility. But when it comes to electricity and mobility, the infrastructure, the power grid, the roads are far from being ready. And you imagine on top of that, you're adding the additional POW kind of activities on top of an aging, stressed infrastructure. What is going to happen? So I think I have a few messages for that. While every kilowatt is the same when it comes to powering the mining unit, not every kilowatt is created equal. When it comes to cleanness or non-cleanness, you can't just look at one particular kilowatt. You have to look at that particular region's energy portfolio. So that's message number 1. Message number 2, I think this ecosystem should not only think about consuming the power, but more importantly, should think about contributing to the power grid. What does that mean? It means something like demand flexibility. It means something like emergency responses. So there's a great win-win opportunity out there between this ecosystem and the power and energy infrastructure systems. And I'm going to make the third point, and I'm going to finish my answer, which is more of a bold statement. I believe, not long into the future, we're not going to be bothered by energy shortage problems. We'll have more than enough energy coming from renewables. Trust me, trust us, we are working along the line. We're going to have more energy than you need. So it's not a problem of energy. It's a problem of instantaneous power. And these two are different, by the way. And when it comes to that, flexibility makes all the differences. And think about yourself as a great resource of flexibility provider. And that is the ecosystem I wish we can drive over. Thank you.
Oh, thank you, Dr. Xie.
Distinguished guests, my great honor to join the World Digital Mining Summit. I'm Hai-Ken Liu, the Hong Kong Sustain Tech Foundation Professor in Accounting and Finance at PolyU.
Go to the next question, also the last question. And what do you guys think the future of POW? And how can we improve the POW ecosystem and create a better blockchain world? And first, this question is for Steve.
Yeah, as a graduate of Texas A&M, I'm proud to have Professor Xie up here, and this is a picture of what the future looks like. I think that as this industry continues to mature, like many other industries, the way that we continue to provide the narrative for stakeholders is by partnering with universities like Texas A&M that can really bring analysis of data and expertise to how Bitcoin mining will be incorporated into strengthening the grid and bringing more energy resources to market. Professor Xie is right. The issue here isn't availability of energy. I'll give you one statistic. Just in Texas, we have 20 gigawatts of solar energy that have completed their interconnection study. And what that means is people have actually placed collateral for that interconnection. Real money has been posted for those projects. And that just gives you an idea of the scale of opportunity just in Texas that we have, just with the solar resources. That's not talking about wind and natural gas and everything else that we have. But the question there is, how do we get it to market? And the transmission is where we have most of the struggle of moving those resources from rural areas to urban areas where they're really mostly needed in these hot days in July when demand spikes. There's nothing else that can contribute more to that effort than Bitcoin mining, and it has enormous implications and value for all citizens of Texas and people around the world. So I think partnerships with universities are critical. And the other partnerships are with cities and municipal governments themselves. As I mentioned earlier, we got the city of Fort Worth to start mining. They've just got one S19. It's a very small pilot project, admittedly, but it's a first step that can scale to something that's really meaningful. I'm currently working with 6 other cities that are very interested in exploring similar pilot projects. That's just in Texas. We're going to start to expand that across the country because cities have a stake in this, because by partnering with Bitcoin miners, they can support financing more transmission to bring these power resources to their communities. And that translates to a cleaner, more environmentally friendly grid for everyone. More availability of power will be cheaper power rates for everyone. And then you have the investment, the tax revenue, and the jobs that Bitcoin miners bring to these communities. It's a rare example of an actual win-win for everybody involved. And the more I meet with these cities, I can tell you they're starting to understand and appreciate this. And it's really exciting to think about what that future can hold. So I encourage everyone in this room, reach out to us. Let's partner with people like Professor Xi at Texas A&M, because this is how we really take this industry to the next level. And particularly as we approach the next halving, where I think we're going to have a significant run-up in prices, we'll be positioned to really tell the story that it's not just about price volatility, it's about the value this can bring to communities. And we can capitalize on that opportunity by building right now. And so the seeds need to be planted right now to prepare this industry to take advantage of that opportunity.
Thank you, Steve. Then Josh?
Yeah, I don't think it's binary. I don't think it's proof of stake or proof of work. And if you're all in on one, I would my opinion is diversify, right? Because you have all of this data center scale and this kind of understanding, and reality is Ethereum has moved or is moving very soon. So we hear to proof of stake. Projects like Zcash may move to proof of stake. Proof of work is not going away. There's no foreseeable future where Bitcoin is not proof of work that I've seen in spite of some kind of problems to deal with. But if you can manage both, if you can participate in a network by securing the network as a validator as well as a miner, I think that's probably pretty smart.
Thank you, Josh. Is it Matthew?
Yeah, so I think in many respects, the future of proof of work is actually here, whether it's the increase of production of renewable energy to power the miners or in the technology itself. One of the main issues with proof of work technology has always been scalability. So you look at Bitcoin, 5 transactions per second, a 10-minute block time. You look at Ethereum. I mean, we all know about the Ethereum gas problems. I don't think we have to talk too much about that. So it's that scalability aspect that proof of work has always struggled with handling. And this relatively new layer 1 proof of work blockchain called Cadena solves that scalability problem. On their testnet, they've been able to conduct 480,000 transactions per second with no real gas fees for the end user, which is actually amazing. And they're able to do that by actually running multiple chains. So it's not just one chain like Bitcoin. They actually expand it using graph theory. It's called chain web. So they're able to run 20, 50 chains simultaneously all at once in order to keep the fees down and the transactions flowing. And you don't have to take just my word for it. I mean, just look at the 2 individuals who started Cadena, Stuart Popejoy and Will Martino. They both started Juno, JP Morgan's first blockchain in 2016 before leaving to start Cadena. And Will Martino was the SEC tech lead before he went over to JP Morgan, met Stuart, and built Cadena. And they were joined in 2019 by Dr. Stuart Haber. So some of you may know Dr. Stuart Haber, the co-inventor of blockchain technology back in the 90s, and the most cited author in the Bitcoin white paper in 2009, actually joined them as an advisor and a cryptographer. So they have an absolutely stacked team, and things are really just kicking off on the Cadena blockchain, NFTs, DeFi, dApps, it's all launching this year. I highly recommend everybody do their own research on it, because I have been talking to people here, and I have been a little surprised with how few people have actually heard of it. The most profitable miners last year were Cadena miners, $500, $600 a day for a couple of months. Absolutely insane. And then to just pivot to another aspect, we think about mining and how it originally started with everybody just being able to start a computer, run your computer at home. You didn't have to have anything particularly fancy to participate in the network and earn rewards for doing so. But now we have the ASICs have came out, GPUs are readily available, and running an ASIC is tough for a lot of people, whether it's due to the electric cost or they can't just have them in their apartment. 83% of the people in the United States live in an urban environment, so that's either an apartment or a relatively small home, and you just can't reasonably host their miners. So that's what we're doing with Kadena Mining Club, is we're, like I said before, we're able to actually link the specific chips from the miner directly to the NFTs. So we're just selling ASIC miners, and that's it. And we're using the amazing technology provided by Kadena to do so. And just one final thing on Kadena, for, really, especially if you're interested in politics or using it for business, they have the first human-readable smart contract language called Pact. So you're not relying on your Solidity developers to tell you what's doing what. You can actually go in there and read the smart contract yourself and figure out what it's doing. And that is huge for corporate adoption, for government adoption. 300 million market cap, less than $2 a coin. Definitely take a look.
Wow, that's amazing. Thank you. And then Lucy?
我从技术角度的话去对它做一个分析，就是因为我们能看得到，就是目前 POW 的话有没落之势，原因是什么呢？因为现在市值前10名的币种里边，除了比特币只有以太坊，而以太坊我们众所周知马上就要转成 POS， 所以说的话，等于就是前10名的市值里边，真正的 POW 的话，现在只有比特币。那究其原因的为什么呢？是因为本身 POW 的话，其实它的性能很低，所以说你很难能够在 POW 这个币种之上去做有价值的应用，所以这样的话呢，你很难有用户能够参与进来。所以我觉得解决性能问题可能是 POW 一个非常重要的未来。那目前我们能看得到，就是我觉得 POW 的未来可能就是roll up， 对 roll up 的话，它就可以大幅提高整个的这个 TPS， 然后可以让更多的应用可以跑在 POW 的币种之上。进而的话，就可以让它能够有更有价值的这种DApp， 然后以及用户可以参与到这种 POW 的币种之中。
Okay, thank you, Lucy. And then Dr. Shi?
I think, as Lucy was mentioning, I believe in the power of technology innovation. So while you guys have contributed so much to put POW at this stage, there's still a few bottlenecks, speed of transaction, security, and so on, and energy efficiency. We got to just keep at it, There's still out there a lot of opportunities for research innovation, which I think is really the way to upgrade it to the next level. Of course, POS also has its own merit and has a lot of interesting features. I think you mentioned about diversification, right? So having a diversified view and diversified portfolio, it's something always worth keeping in mind.
Yes, thank you. And Bob, do you want to answer this question?
Maybe just to add a little bit to that. I think something that people often underappreciate is how many layers and richness of ecosystem that you have to have for any technology to succeed. If you think back to the beginnings of the web or the beginnings of mobile, when these things started, you were working at a very low primitive layer, and then over time you get more and more middleware, frameworks, support systems. And I think really where you see technologies really succeeding in the world and really hitting that mass market, what the layers below are, users don't touch that stuff. There's layers and layers on top, and the innards of how these things work are really of very little interest to end users. We drive cars. Who knows how cars work? Who could, maintain their own car? What's the internet? How do phones work? People don't know these things, and they don't care because they don't need to care. So I think that's the same kind of maturity that we're going to see within the blockchain ecosystem over the next few years as you get more and more mass market adoption. Is these things are just sort of low down, and you know, from our perspective, because we're right in the middle of it, you know, we are obviously focusing on these low-level aspects. But ultimately, you know, that's detail which does not matter to end users. You know, what really matters to end users is, what does this thing do for me? Here is a product that provides me some value, and that's really where things are going to get driven, is useful applications and devices which provide value to people. And we've got a lot of work to do.
Okay, thank you. Thank you, Bob. Now we end our questions today, and then we enter into the free Q&A time. And first, our guests, you can ask each other some questions too. Do you want to ask any guest?
What applications do you guys like to use? What do you see value in as a human being, personally?
That's a hard question.
I think Moon Wallet on Lightning is a really cool app, just because it's completely open source. It's very user-friendly. It takes 30 seconds to be operating. I've gotten many people to open it up, and I'll send them their first Satoshis. It's super easy to use, no KYC. So I recommend it to people that haven't interacted with the Lightning Network as a payment platform.
Yeah, so how you just were talking about how the real end goal for blockchain technology and proof of work technology is for the end user to be using it without even knowing that they're using it. And a really good example of that, there's a company called DocuShield, which is using Cadena's private blockchain called Kuro to build military-grade document storage. So privacy is really important to me. You know, Microsoft, AWS, they've pretty much all been hacked by this point. But proof of work blockchains are very durable, very unlikely to get hacked. So if I am going to be putting very important documents somewhere, maybe a private blockchain is a good place to put them.
What do you think about it? Can I answer your question?
Yeah, I'd welcome any thoughts from other people. Josh, look at that, you're sitting there.
No, is there any questions out here?
Yeah, maybe ask some audience members.
Mm-hmm.
No.
It's a hard question. Yeah.
Or any questions about anything, really?
Yeah.
You have the
questions
opportunity.
You want to ask our guests?
I have a question. As a data scientist, it's frustrating about not being able to fight the media narrative about the energy usage of proof of work, where electricity and metering is a somewhat easily measured data point. So can you describe how do we communicate better as an industry about proof of work and energy consumption when the data is there? It's just a matter of collecting it and communicating it.
I think one of the best things we can do, and perhaps the professor can comment on this as well, is have institutions with a very widely respected brand like Texas A&M, particularly in Texas, that bring a lot of expertise to help put data behind the reality that proof of work is a valuable component to strengthening any grid. When a miner says that, it's received a lot differently by the public than when a university can help provide research that supports that in a third-party kind of vetted way. And that's what we're trying to really support within the Texas Blockchain Council. And I'd love to see more universities embrace this kind of research and then help the industry also grow to do better, and not just only talk about the good, but also opportunities to improve and help educate the public more. And I think generally people are more receptive to inform themselves through a university or a third party like that instead of kind of industry-based sources.
Just to piggyback what Steve said, it's a great question and great observation. I see there's a very important need out there, as you articulated, the kind of a precision level control and knowledge of the energy footprint of big and small mining activities. So we are actually, in the process of developing such initiatives at our university. We welcome, industry partners, either you're a mining company or a pool company or a device company, to kind of work with us to create a transparent platform that could really, provide trustworthy information about data on energy and potentially carbon footprint into the different aspects of the mining activities. So, yeah.
Yes.
Technology is there. You just need to build a platform. Right, so.
Any more questions? Okay, I think our panel is finished today. And last, I have some surprise, a little gifts for all our panel guests. Wow. Yeah.
Yes. Yeah. Thank you.
This is Bing Dun Dun.
Looks like something my
It's
daughter's
a mascot of the Beijing Olympic Winter.
Thank you.
It's very cute. You can send it to your children or nephews.
My daughter will love this thing.
Oh,
and
that's
these are
awesome.
collectibles. So if you keep them in the box, I'm sure it's always a good thing.
You can give it to your children. Yeah.
Thank you.
Okay,
This is
thanks
pretty
for
awesome. I
panel
like
guests. Thank you.
Thank you.
Thank you, everyone.
Okay. Everyone, please give a big hand to all our panelists.
Yeah.
Okay, great job, guys. Yeah. Great job. Great job. So it's interesting to see the relationship between energy, the types of energy development, and proof of work. That was a great opportunity to learn more about how energy and being active in your local region is important to operating as a blockchain. Next, coming up, we're going to have a speech from Xmei Lin. Xmei, can you? Are you still? Yes. Okay. Okay, we'll wait. Okay, so we have a moment. Hope you guys are the last stand. You've been here till the end. We really appreciate you guys. Hopefully, this has been an informative conference. You've gotten to meet a lot of people, and hopefully, it's been small enough that you could get a chance to talk and to potentially make partnerships that are going to last through the years to come. I think our final speech is most likely going to be about proof of work. Is it, Xmei? Okay. Yeah. Everyone give a big round of applause for Xmei.
可以把麦开开吗？让那个人把我的麦开。嗨。OK, thank you. Where is this? Yeah, I need that one.
Does he have it?
Okay, guys, this is the final speech. After my speech, you guys all can rest. Okay? A peer-to-peer version of electronic cash would allow online payments to be sent directly from one party to another without going through a financial institution.
Digital signatures provide part of the solution, but the main benefits are lost if a trusted third party is still required to prevent double spending. We propose a solution to the double spending problem using a peer-to-peer network. The network timestamps transactions by hashing them into an ongoing chain of hash-based proof of work, forming a record that cannot be changed without redoing the proof of work. The longest chain not only serves as a proof of the sequence of the events witnessed, but proves that it came from the largest pool of CPU power. As long as the majority of CPU power is controlled by nodes that are not cooperating to attack the network, they will generate the longest chain and outpace attackers. Hi, audience, I'm Xmei, the head of marketing of BITMAIN. I believe you guys must be very familiar with this paragraph. It's from Bitcoin white paper by Satoshi Nakamoto. It's where many guests first, including myself, first know about Bitcoin and proof of work. I still remember the first time I read the Bitcoin white papers nearly 10 years ago, and I was just a freshman at university, and some of my friends talked about electronic cash called Bitcoin, which sounds very interesting. I majored in finance, so I think I need to learn about it. So I downloaded the white paper, then I found it's too difficult for me, and I can't understand it totally. But it's truly super interesting. So just that little curiosity finally led me into this industry and bring me here today. So for me, my knowledge of proof of work is from Satoshi Nakamoto. But what is proof of work? What is proof of work? This is a basic but very difficult question. First, it's a concept invented by Moni and Cynthia in 1993 to prevent junk mails. Just as it says, it's proof of work. This means people would be willing to work hard for some worthwhile things. That's proof of work. Second is mathematics. This is the basic three formulas of the Bitcoin algorithms. It's too complicated. To be honest, I don't understand them at all. But these six formulas can lead to one conclusion, that from X you can get Y, but you can't from Y to get an X reversely. And also, as a consensus, it's practiced by Satoshi. And then it became being the consensus of Bitcoin and then popularized. The longest chain is the safest, and it's almost impossible to revise Bitcoin. And also, for me, it's a governance way. Any individual can help the network security without any economic barriers. Individuals would love to secure the network by earning Bitcoin as rewards, and this process is called mining. And last, for me, it's a philosophy too. People are varying. Some people are very good, some people are very bad. But the technology can help us to get away from evil and become better. Also, I think the POW Bitcoin is the original DAO. DAO is a very popular concept recently, but the POW Bitcoin is the original DAO. A good system should punish evil and promote well. And most important thing is that people can govern themselves. So, all in all, POW is still recognized by the current blockchain industry and academia as the best decentralized technology consensus method in human history, which is beyond doubt. And POS, for us, I think it cannot theoretically solve the problem of centralization. And now let's enter into a very sharp topic. When we talk about POW, some people always say that, and you criticize it by saying the POW mining consumes too much energy. Is it true? POW consumes energy. It's a fact. It's true. And no one would deny it. It consumes energy, but the consumption of energy, we think is worthwhile. Why? First, Bitcoin provides a real and hard support for the price of Bitcoin. Energy provides a real and hard support for the price of Bitcoin. You can see this formula, and Bitcoin price, we can basically, it equals energy price and worth of securing the network and other variants, a lot of other effects. And also energy as a way to endorse the block. It is objective. You can't find a more objective way to endorse the block. And last, energy. Energy, the thing itself, is a bridge between the virtual world and the real world. It's the only same existence, the only same existing things in the two worlds. Think about it. It's common, it will be a common standard to access, the workload in the virtual world of the real world. So this is very important. And also we think for us, POW is never the problem because, in the Earth, in our human being history, energy is always enough on the Earth. With the development of the civilizations, the energy source is diversifying and the total available energy amount is growing. And the second is energy for us is a measurable metric of development of civilization. The more energy we can use, the more civilized our civilization. Energy use promotes human civilization. And this is a little calculation. This page want to tell us that we always talk about that POW consumes energy. It's true it consumes energy. But actually, POW doesn't really consume too much energy. Bitcoin mining only consumes like 35% of the data center and 0.21% of the world energy produced. So it's just a very small, consumption. And let's think about how many benefits it brings to us. First, it will stabilize the grid. Bitcoin will buy energy anywhere and anytime, and the energy infrastructure is profitable to build. So mining is so then we get a large grid. And then mining, we all know is flexible. You can turn off, you can turn on, and just to meet the demand for electricity. So we get a more stable grid. And second, it can promote clean energy use. A lot of mining companies, they compare today, choose clean energy mining, and this is from some point promotes the research and practice of clean energy mining. And second is very important. POW mining do bring a lot of employments. We all know the mining construction needs a lot of blue-collar workers. These workers, I think they should be respected, but sometimes not. However, Bitcoin respects everyone, Bitcoin respects them, and Bitcoin mining brings job opportunities for these blue-collar workers, and then let them to feed their families, feed their children. And last, when we consider the Bitcoin price and the whole mining industry and the market value of all listed mining companies, Bitcoin really creates a new economic growth, and we all take advantage from it. And how does POW mining really benefit the local people? I want to share a story with you guys. It's from our customers called Iris Energy, and this is a very interesting story. As we all know, a lot of clean energy, for example, like hydropower or geothermal, they're usually located in a remote area. So it's hard to directly utilize and will be wasted a lot during the transmission. But mining can directly utilize the energy efficiently and create a revenue to contribute to the local community. Iris Energy, which is our very important customers, it directly utilizes the hydropower from the hydropower station in Canal Flats in Canada, and it brings jobs and revenues to the Kootenai communities. The Kootenai communities has a very long history, and they are the first people to live in the North America. So their history is longer than the country Canada. And in 2022, Iris Energy also donated $500,000 to Kootenai Nation, and they will donate this money every year. And this is just a story of the stories, just to show us that POW mining can really benefit the local people, the local communities. And also, considering so many benefits that POW brings to the world, in POW, with BITMAIN we trust, and in POW, BITMAIN will contribute. Here I show you some activities we do recently. We launched an antique and miner coupon activities for S1 and S2. They're very old miners, and we launched these activities just want to promote recycling the miners and reduce electronic waste and promote clean mining. If you're interested in it, you can log into our website to know more about it. And second, BITMAIN has already purchased 130-ton carbon credit for all our miners. So our customers, believe me, the antminers running in your data centers are the cleanest and most environmental friendly miners. And last BITMAIN donated $1 million to Hong Kong Sustainable Foundations to donate to the Hong Kong Polytechnic University for the research of Bitcoin and clean energy minings.
Distinguished guests, my great honor to join the World Digital Mining Summit. I'm Haiken Liu, the Hong Kong SustainTech Foundation Professor in Accounting and Finance at PolyU. My research team is currently working on a project titled Bitcoin and Carbon Neutrality. An overarching theme of this project is to study whether the development of blockchain-based cryptocurrency and sustainability goals can be aligned. Specifically, we study the following 4 questions. First, the dynamics and heterogeneities on Bitcoin's carbon footprint. Second, does the rise of Bitcoin inhibit or propel the development of clean energy? Third, how does the Bitcoin challenge the value and business model of the conventional power companies? And finally, the role of Bitcoin industry leaders such as manufacturer, mining, and blockchain companies in achieving sustainability goals. We will share research findings in the form of white papers, research-based articles, and we appreciate your inputs and sharing. Thank you.
Thanks, Professor Liu. This would be a very important research for the Bitcoin mining industry. And also we seek to contributing to the whole POW ecosystem. Now BITMAIN has accepted the Ethereum Classic payment to purchase all antminers. And also the spot order of E9 come back again. You can mine Ethereum Classic and Ethereum with the best miners. And now it's the last of my speech. So to all POW participants and believers, first, POW, a lot of us know it from Satoshi, but now it's to all the people. Here I want to talk more about Satoshi. Satoshi Nakamoto, I don't know who you are, where are you from, are you dead or still alive? This is a question. I don't know. But sometimes I think of Satoshi. How did Satoshi make it? I'm not meaning that create a Bitcoin, but after the creation of Bitcoin, after you made such incredible creations, after you made such great success and wealth, you have influence, you have money, you have power, you have the honor to be writing in the whole human history. But you give them all up. You even give up your real name. No one knows who is Satoshi. Satoshi gave up everything, but he leaves Bitcoin to us. He leaves Bitcoin to every ordinary people like you, like me. That's incredible. So I think following the way of Satoshi is not only following the way of POW or Bitcoin, but also following the way of creating better things for every people, from people to people and by people. Or more easily, let us just do good things and not do bad things. Thanks.
So thank you, Xmei. That was a wonderful speech, and it's exciting to know all the good that POW is doing in our world right now. Can everyone give a last round of applause for Xmei? Okay. All right. I want to thank you all for joining us for this year's WDMS. BITMAIN, together with our partners and sponsors, would like to thank each of you for being a part of this event, especially those who tuned in online. Without you, this event would not be possible. As the mining industry continues to grow, we are honored to be with you on this journey. BITMAIN, as the world's leading manufacturer of cryptocurrency mining hardware, will continue to support the industry and work with you to build a stronger future for digital asset mining. As part of our growing community, we're excited to see what you'll develop this year. I want to let everyone know that we're going to be at Mining Disrupt with our latest AntSpace containers. I don't believe these have been seen anywhere in the US to date. So if you're at Mining Disrupt, would love to see you at our booth and to check them out. And it's the we turned our cooling tower into a container format because it's easier to ship. So it's interesting, and it's the first time that'll be shown in the U.S. So thank you guys for coming. Please check out our sponsors. Please have a great time, and if you get a chance, check out Mind Disrupt. Have a great day. Thank you guys.